25% of the world is vaccinated. So I think this reopening story is only just sort of beginning.
Businesses have been ready to reopen faster than workers have been ready to come back.
We've missed on inflation for so long that the Fed is really focused on achieving its inflation target.
Why would you still be bearish on supply? I mean, it's going to pick up eventually.
We're going to experience something that I don't think the markets are quite prepared for, and that is a potential contraction in personal incomes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Where did all the bond bears go? From New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramowicz is not in Crete. Joining us for the next several hours is Romain Bostic. Equity futures this morning up 6. We advance a little more than a tenth of 1% on the S&P, TK. Got to kick it off with the bond market this Wednesday morning. 30 south of 2, 10s at 134.
I think, John, we've got to remember Bond 101. We're going to do that with Jim Caron, but you really got to remember we're quoting yield because that's what the pros do. That's what we do on Bloomberg Surveillance. This is about price. There is a bid price up on bonds, and then you saw the jump condition over to equities yesterday in the NASDAQ space. Absolutely original bond market this morning.
Tom, slice and dice the bond market with me. 10-year reals, negative 1%. That was a real yield move in yesterday's session. What's the significance of that?
The significance of this is absolutely profound. 3 things make that up. The nominal yield, as you know, John, it's come down. We'll do that in the data check. The inflation expectation is gyrating a little bit up, and that gives you a residual that is ever more negative. But the other thing, John, that we're dealing with is the x-axis. The duration now of a negative yield is long. Swiss 20-year bonds flipped over to a negative yield last night. It's, again, the length here of negative yields, again, reasserting.
And for this equity market, Romain, it's not risk on, risk off. It's rotation on, rotation off.
Rotation back into growth. And you have to wonder whether this has actually changed the belief, I guess, in that reflation trade, in inflation itself, and maybe in the trajectory of growth. A big reassessment that we saw play out not only in the bond market, but, of course, in the equity market yesterday.
But, Romain, you were living this in the close yesterday.
I live it every day,
it was absolutely stunning. And there was Jedi, Microsoft, Amazon. And then, Romain, am I right? It got a life of its own about 2:30.
It did. You saw the bid come in, but what got the bid, Tom? You talk about where money goes. You talk about where price goes. It was back into the so-called growth stocks, but was that really a bet on growth, or was it more of a bet on safety right now? There are a lot of people reassessing basically what the narrative should be.
43.40 on S&P 500 futures. Let's whip through the price action this Wednesday morning. Good morning to you all. Equity futures up 6. We advanced by 0.13%. In the FX market, euro dollar's a snooze, 118.28. But there's the move, TK. 134.80 on 10s this morning.
Yeah, the 10-year yield, the nominal yield, 134.80. You got the 30-year bond, 3 basis points under 2%. John, what I would talk about is this is so unexpected. And that what was the zeitgeist, January, February? It was the certitude of inflation higher at some level, some magnitude. And we've gotten the exact opposite. I like what Saravelos talks about here. George Saravelos publishing moments ago for Deutsche Bank. He talks about low R starred. And he says, guess what? Price up in bonds, yield down.
Let's kick off the morning with Jim Caron and Morgan Stanley Investment Management, fixed income portfolio manager. Jim, let's go straight there. Number one question, the cyclical trade, the inflation trade, is this still on?
Well, good morning, and thanks for having me on your show. And I do think it's still on, but we have shifted down gears. So let me just kind of unpack this and go through this here a little bit. What we have to understand is that the delta or the rate of change is really what matters the most to bond investors. So in the first quarter and even in parts of the second quarter, what we were seeing is rising growth, rising inflation, and an increase in policy easiness. Policy was getting easier. At this point, what the market is sensing is that we're past the peak. Growth is going to decelerate. Inflation is likely to decelerate. And policy, we're past the peak in policy, and we're already starting to talk about ways to take that away. Now, that doesn't mean that the level of growth is bad. That doesn't mean that the level of inflation is too low, or that the level of policy easiness is that policy is too tight. But what it does mean is that we're past the peak. So essentially the reflation trade that we're talking about is still going to be there. It's just going to take a bit longer to actually achieve these goals. So, for example, if we start to think about the more macro elements that make up the reflation trade, right, there are three of those. One is that you got higher 10-year yields. Then you got higher 10-year yields or higher long-term yields and a steepening of the curve, which is pretty rare in and of itself. And you also got a weaker dollar. So what happened is when everybody got into the reflation trades, they were underweight treasuries, they had curve steepeners on, and they were short the dollar.
Right.
And now that the rate of change or the pace of that move is starting to decline, the second derivative, as they say, people are unwinding their short in the dollar, they're taking off their curve steepeners, and they're buying back their underweight in U.S. treasuries, and that's what's making this all happen.
Okay, Jim, brilliantly explained, but I want to let's talk some math here, folks. It is Math Wednesday here on Bloomberg Surveillance. Okay, you mentioned the delta. If I look at the convexity, and as Stephen Galley over at Nordea says today, it's a bear squeeze. Okay, fine. The delta's a first derivative. The gamma's a second derivative. Right now, are you observing a convexity trade that overshoots and then we all climb back on the reflation trade? Or is there some substance to this lower yield market that we're in now?
So I do think that there is a convexity component to this, and to the extent that you can overshoot lower. I do think that 10-year treasury yields can get down to 1.2%, 1.25%. But I think, Tom, it's going to get hard to really get below that for any real material period of time, at least given what we know right now with the expectations for growth. I mean, growth this year is supposed to come in somewhere around 8% in the U.S. Next year, it's somewhere around 4.5%.
Right.
It's going to be hard for 10-year yields to stay as low, especially as the Fed starts to pull back and taper even a little bit. So I think this is a correction. The reflation trade is still with us, but it's going to take some time for these positions to get cleaned up.
Okay, Romaine, this is where you step in. If Lisa was here, she'd be talking the third derivative. Go at it.
Okay, all right. I'm going to stick with the first derivative for right now, and that it remains the Fed, Jim, here. And we talk about the messaging coming out of them. It seemed like a few weeks ago there was general consensus, at least the perception that there was consensus at the Fed here. It doesn't seem that's the case anymore here. And I'm wondering how you view the messaging coming out of the Fed and how the market's interpreting it.
So that's a great question, Romaine, because for the past couple of weeks, the hawks at the Fed have been absolutely winning the narrative in the marketplace. And now I think it's become a lot more dovish, where people are taking the doves a lot more seriously at this point. So look, I mean, what did the Fed tell us in the middle of June at their FOMC meeting? Effectively, they said it's time to start talking about tapering, and we need to see further substantial progress. Well, look, the data is good right now. The problem is that it's not good enough. And I think that's the debate at the Fed. It's not whether or not the data is good. It's always about, is it good enough to get us to the next level, which is for the Fed to enact a policy change. And right now, I would argue that the data is good, but I just don't see an acceleration in the data to the point where we're going to have unanchored inflation, and that's going to cause the Fed to actually start to act sooner rather than later. So look, the mid 2023 dot, the expectation for the Fed to hike rates in mid 2023, I think that's valid. The problem is that the markets had started to push that in already to the end of 2022 for the first rate hike. Some had even earlier than that. So I think that's all going away. And as people push back their expectations for Fed rate hikes, probably into that mid to late 2023 area, bond yields are going to fall on that.
Jim, the economic data can tell you so much. How the market responds to it can tell you a lot more sometimes. What's your read on that over the last couple of weeks?
Yeah, I mean, the markets are telling you that we're going into a period where we're past the peak, and that even if we look at the OPEC and the oil discussions right now, some people are talking about now more stable to lower levels in oil. That's going to weigh on inflation. The jobs data is not as strong as we hoped. It's strong. It's still very, very good. So what the price action is effectively telling us is that they're chopping off that right tail where things are going to be great, but things just might be good going forward. And we recognize that it took a lot of policy stimulus. It took a lot of fiscal stimulus. It took a lot of work to get us to these levels. Now a lot of that stimulus is starting to go away, or it's already well known and priced into the markets. We need another catalyst to bring us back towards higher yields. Now, that catalyst needs to be there is after everybody's cleaned up some of their positions. And I think the underweights in the dollar, the underweights in U.S. Treasuries, this is still in the process of being cleaned up. I don't think the trend towards higher yield is over. I think that it's just going to be a lot slower and it's going to be more of a grind. And we're going to have to see changes in the data relative to your point, relative to the actual positioning in the market.
It has been painful to commit to that trade over the last couple of weeks. Jim, it's good to catch up, sir. Jim Karen and Morgan Stanley Investment Management. For the economic data, we seem to be focused overwhelmingly, Tom, on rate of change and not levels. And the ISM out yesterday was just a perfect example of that. Deceleration, we dropped by about 3-4 points. But the underlying story is pretty clear. We don't have a problem with demand. In fact, we have a problem keeping up with demand. And you saw that pretty clearly yesterday.
Well, yeah, you go back to the foundation of it, John, which is the boom economy that we're in. And everybody agrees we're in a boom economy. And there can be a question about the glide path. But really, as Sarah Vellis at Deutsche Bank mentions, we had an R-start adjustment yesterday. And not only did you see it in the bond market, but, John, you saw it with massive rotation back to large NASDAQ yesterday.
Got to talk about policy too. Remain brought up the Federal Reserve, and I think he's right to. You talked about Seb Galley of Nordea this morning, Tom. In his note, he talks about a Fed that shifted away from focusing overwhelmingly on the unemployment statistics, the labor market, and a Fed thinking about risk management a little bit more. A change in emphasis matters, and the bond market's picked up on that.
Searching for data, and with the bond market, we're searching for data. I like what Zero Hedge said, where the soft data's catching up with the hard data. You know, they're both coming together here with a more cautious view. But far more, John, I would go to the earnings season, and frankly, that can fold right into a bond market analysis as well. And July 13th is critical. Like, I've never said this, John. This earnings season is the most interesting by far that I've ever seen.
JP Morgan kicking things off next week. Full coverage right here on TV and radio. Just a headline I want to bring to you, Tom. It comes out of Haiti. The president has been assassinated. The AFP citing the prime minister.
Yeah, the prime minister there with a 14-month term, and there's been huge turmoil. Council on Foreign Relations has reported of the increased protests over there, and also the idea that he was working with the judiciary there. There was a lot of ill will in the Caribbean's poorest country.
AFP citing the prime minister that the Haiti president was, quote, assassinated. More on that a little bit later this morning. Coming up in the next hour, Abby Joseph Cohen of Goldman Sachs on this equity market at 43.39 on the S&P. From New York City this morning, good morning. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Japan reportedly is preparing to declare a new state of emergency in Tokyo. According to the Sankei newspaper, that would mean the Summer Olympics will be held without spectators. The paper says Prime Minister Yoshihide Suga will make the final decision. Earlier today, Tokyo reported the most number of new coronavirus cases since May the 13th. President Biden will take on the rapidly growing threat of ransomware against companies and local institutions. Over the weekend, there was a ransomware attack blamed on Russian hackers that affected more than 1,000 businesses with victims in at least 17 countries. The president will meet with agency leaders today to discuss administration strategy. The White House calls it a national security priority. And Hurricane Elsa has now weakened to a tropical storm in the Gulf of Mexico. It's expected to make landfall today north of Tampa. The storm's top winds reach 70 miles an hour. The concern is that Elsa could push a dangerous storm surge into Tampa Bay, raising ocean levels up to 5 feet. In New York City, former police officer Eric Adams has won the Democratic mayoral primary. That makes the Brooklyn borough president the overwhelming favorite to be elected mayor in November. Adams held off former sanitation commissioner Catherine Garcia by 1 percentage point in the ranked choice voting. In soccer, Italy has reached Sunday's final of the European Championship. The Italians beat Spain 4-2 in a penalty shootout after a 1-1 draw. They'll face either England or Denmark, who square off today in the other semi-final in London. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
In today's briefing, we discussed how the Delta variant is already responsible for half of all cases in many parts of this country. It's more easily transmissible, potentially more dangerous. And it should be because of reconsideration. And look, let me put it another way. It seems to me that should cause everybody to think twice.
The President of the United States from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramowicz is out of the country today and through the rest of this week. Remain Bostic with us for the next couple of hours. In your equity market, we're set up as follows from New York on Wall Street. Futures up 5 on the S&P, 43.38. Call it 43.39. We'll round that up for you. Outside of that, in the bond market, unchanged after a big rally in yesterday's session. 140.80, 134.80 rather, on a US 10-year. Yields heading south, lower. Treasuries firmer. In the FX market, euro-dollar unchanged at 118.22. And just to round it out, TK, crude with a bid up 1.7% after yesterday's move lower, 74.61 on WTI.
I know European yields come in with the U.S. yields as well. The Swiss 20-year a negative yield now. That's a big deal off the positive yield move of the last number of weeks. Right now, and this is beyond important to the past of America and the future of America, the great divide, no, not the two Americas of John Edwards of years ago, but the science and anti-science of America. It has been with us from the very beginning. Peter Hotez, the great virologist of Texas, did a brilliant article in Scientific American a couple weeks ago. Our Josh Wingrove goes further with reporting from Missouri. Our White House correspondent joins us this morning. Josh, to lump what Dr. Hotez talked about into the Missouri that you studied and the agony of sick people getting sicker, what's the level of anti-science you observed?
I mean, this is a part of a country that's very conservative. Big supporters of Donald Trump live there, and they are having one of, if not the hotspot for COVID outbreaks in the country, particularly the Delta variant. Of all the variants that are sequenced in Missouri, 96% in this part of Missouri have come back Delta. So they're having a problem right now. One hospital there, its COVID unit is more full than it has been in the whole course of the pandemic. The other one there closed a special COVID unit and has had to reopen it. And the reason there is vaccine uptake is just low. And these things run deeper than what might have been the assumption. For instance, Donald Trump hasn't been out there encouraging people to get vaccines. This is Trump country. But the people I spoke with there say that even if Donald Trump told them to get it, they have doubts. They think it was rushed. They wonder about the safety, and they trust that they either won't get the virus or they don't think it'll be that bad.
Josh, is it new, or can you say, as I said to someone from Johns Hopkins yesterday, is it what we saw with measles, rubella? Is it what we saw with other virus and bacterial illnesses? Are we repeating history, or is there something new here?
I think we always repeat history, Tom, a little bit for sure. But I think, early on in this pandemic, the Biden administration said a couple of things. They said, equity is going to be a real problem. For instance, there are real reasons why African Americans in particular in the U.S. would be not keen to jump on to the bandwagon of a vaccine. Biden really went after that. But what we're seeing instead is there's progress there. But it's Republican areas that in many cases are really the laggards. The vaccine map looks almost identical to the Electoral College map. The lowest vaccinated states are Republican. The highest ones are Democrat. And Biden fell short of his July 4th goal. Remember, 70% of U.S. adults with one shot, that was his goal. He hit about 67. And the reason is because he is way under that in Republican states and even further under that in more rural parts of the state like Southwest Missouri. These are also places that have tended to be the fastest to lift all restrictions. Only at the hospitals did I see a mask in Springfield. It's maybe a slight exaggeration, but overwhelmingly no mask wearing there. And now they're in a crisis, and the exhaustion of the healthcare workers in these communities, Tom, you can imagine. They thought they were out of it, and now they are right back into it.
Josh, this administration, this Democratic administration, is consistently touting the science. So let's go through some of it. In today's briefing, we discussed how the Delta variant is already responsible for half of the cases in many parts of this country. Point one. Point two, Governor Cuomo of New York. Over the 4th of July weekend, more people in New York State were shot than died of COVID. They're the stats coming from Democrats. Why on earth do we still have these travel restrictions? Why on earth are we still punishing the airlines? Why on earth are we still keeping loved ones from loved ones and not doing something about this? These were the former president's policies, and this administration seems to be sticking with them. even though the science doesn't back it up?
Absolutely. It has been one of the huge question marks here. They said yesterday, they essentially punted yesterday when they were asked about this. You know, they've grappled with vaccine passports. First they said they'd never do them, and then they said maybe we'll do them optionally. But you know, they really are sort of skewing away from that. Remember, Biden has changed his tune here, which I think is notable. You know, if you or someone in the country who was skeptical about the virus or skeptical about the vaccine, even if you weren't a diehard Republican, you had the president telling you 5 alarm. You know, aside from the clip that we just played, Biden is more or less, you know, declaring that this thing is pretty much over. And so, you know, he's having an Independence Day party at the White House. And so I think that there's a risk that he, you know, sort of sends a message. But from his perspective, they have acknowledged that they can't do anything. In some cases, to get hardcore conservatives to take a vaccine, Biden would be the worst possible messenger.
Well, and Josh, of course, the message is coming from more than just the White House. I mean, businesses are reopening. Everyone's flinging open their doors and saying, come back to our concerts, come back to our sporting events, come back to our restaurants here. I guess the genie is out of the bottle here. And the big question is, if we do see a resurgence of the COVID virus, specifically with the Delta and these Lambda variants here, is there any political feasibility at all that we can go back to any sort of mandated lockdowns?
Not in Missouri, and not in a lot of places in this country. But in fairness, one hospital chief I spoke to there said he doesn't think that is productive. They think that they should focus their energy on vaccines. But we're talking really low vaccination rates in these places, you know, in the 40% in the cities, and even lower than that in the counties around them. And just to go back to Jonathan's question, which I feel bad that I didn't necessarily directly answer, we simply do not know a timeline or any idea when they are going to lift travel restrictions. They have completely just pushed that aside and dodged every question on it. I can't say it any more simply than that. They've just ducked the issue entirely.
It's really not good enough. And you know the response you get from the president when you hear the question asked. Come on, man. It's July 4th weekend. Okay. Josh Wingrove down in D.C. Josh, good to catch up. Thank you. It's an economy that's reopened, raring to go. And as we saw in the ISM yesterday, demand is there. It's the struggle to keep up with demand. And here's the killer quote in the industry comments from the ISM yesterday, Tom. Restaurants are quickly, maybe too quickly, returning to 2019 sales levels. Some locations cannot open for business or have limited hours as we cannot staff the restaurant to meet consumer demand.
John, I had breakfast yesterday. It was one step up from McDonald's, and they were half open and they were understaffed at that. Like literally, you couldn't get your order in. I was trying to get in, you know, 3 eggs over easy, steak,
I'm sure.
fries.
Tom, always
toast.
value add. Thank you.
Thank you.
That's the issue in this country right now.
Yeah, it's an issue. And I actually interviewed a couple of restaurant owners here in New York a couple of weeks ago. And I mean, not only did they talk about the staffing issues, I thought the interesting thing, they said they can't even get the supplies they need. One restaurant owner said her wine guy, normally he shows up every day. Now it's just a crapshoot of whether he
There's
even
a
shows
Tang
up.
shortage.
Yeah.
A Tang shortage.
There is a Tang shortage.
I've missed you, Tom. Coming up, David Bianco of DWS Group, the CIO for Americas. From New York City this Wednesday morning, good morning. 43.39 on the
Dow
S&P.
up 18 points.
From New York City this Wednesday morning, good morning. Here's the price action. Going into the opening bell, about 3 hours away, equity futures 43.39, advancing about 5 points on the S&P. We're up about 0.12%. We don't seem to have proper risk-off days anymore, where this equity market totally de-risks. We seem to have rotation on, rotation off, and yesterday was a perfect example of that. Down about 0.2% on the S&P. It was the first day that market finished in the red since June 23rd. Switch up the board and look at the sector composition of this. Energy and the financials. Energy down yesterday by 3.2%. The banks down by 2.5%. No surprise given what was happening with crude coming off the highs, with the bond market, with an aggressive rally. But here's the story for me. Banks topped the first week of June. Energy, arguably the middle of June. And if you switch up the board and get to the bond market, this story is old as time right now because that 10-year yield topped at the end of March on a closing basis at 174, and right now 40 basis points south of that at 134.30. Your 30-year yield right now south of 2% at 196.86, and when you slice and dice this bond market, and we'll do that a whole lot more a little bit later, what you find is this is a real yield move. Now, the first quarter of this year wasn't just about reflation, it was about a positive growth shock. And now this market is very preoccupied with deceleration and reversing some of that growth shock. And you'd have to say, Tom, maybe that's the story reflected in that move in real yields in yesterday's session.
Yeah, I like that. I want to advance it to Friday where you got a FinMin meeting. I believe it's in Venice, Italy. John, I think you and I should attend that and, do on
just for the vacation, the trip.
Spot reporting.
Are we taking Mrs. Keene along for the ride?
We should take Mrs. Keene. We'll take Vet Bill with us as well. But the major issue here is you come up with stagflation. You come up with the emotion here of a slower economy. It's out there somewhere, and that's one of the worries where you see digital explode. Let's jump over to that right now. David Bianco joins with DWS Group. They're America's, their CIO. John outlines how odd yesterday was. Romain's mentioned it as well. David Bianco, these digital stocks seem to have a short-term life, but also a very long-term life as well. Is that really what we're going to learn in earnings season?
Tom, I think so. I think what we're going to learn during earnings season is that these digital stocks, these technology, communication stocks, growth stocks in general, they've been doing well for the past few years, did very well during the pandemic. They continue to do extremely well during the second quarter. I think we'll hear about that during earnings season. And the longer term outlook, the next several years at least, looks very good for these digital stocks. And the biggest threat to them, at least the perception of many investors, was that interest rates would climb. And we've gone out of our way to point out there's a difference between nominal interest rates and real interest rates. And real interest rates are still at near all-time lows. But what's happened over the past couple of few weeks, with this kind of recollapse of longer-term interest rates, as Jonathan was saying, the 10-year Treasury yield going from 1.75 down to 1.35. Okay, 40 basis points may not be the biggest of moves, but it's significant. And it came at a time when people thought rates would start rising further. So tech stocks, the re-rotation, it's back. And I think it's here to stay. We've always felt the reopening stocks. Yeah.
David, I don't mean to cut you off, but we got like 18 things to do here, and Romain's taking notes for the close this afternoon. Real simple, David Bianco. Do you rebalance here to tech, or do you still participate in the consensus cyclical global play that was, in vogue even 8 weeks ago?
We're believers in the recovery. And the equity market is looking very good versus the alternatives that fixed income has to offer. But we've leaned against the reflation and the deep cyclical value play. Underweight industrials, materials, and energy. Our view is that the inflation you've seen around the reopening is inflation that is transitory, that it will pass. High prices will fix high prices, particularly for commodities. But we believe that this cycle will last and that there is inflation risk from the monetary and fiscal threats that are out there. But we think the better inflation protection plays are banks and technology, these intangible businesses. There's demand for semiconductors everywhere, but all of the other digital businesses we think will thrive over the coming years. Yep. And as long as inflation and interest rates don't surge, we expect them to gradually rise. As long as rates don't surge, these valuations make sense for these growth companies.
Well, let's take it back to the money question at the start of 2021. It wasn't about owning the equity market. It was what you wanted to own within the equity market. And what divides just a short-term transitory reopening trade and a durable long-term investment in the cyclical space in deep value, as you pointed out, David? What does divide those two things, and why do you make the call effectively on this program this morning that it's the former, not the latter? This is just a short-term reopening cyclical play.
Right. It's a short-term cyclical play. These reopening stocks are having a moment, and that moment will pass. A lot of these businesses are truly challenged, whether it be certain retailers or commodity producers or even these industrial capital goods. This infrastructure package is not going to be as big as many people have hoped, and the outlook for a lot of end markets for industrials is actually challenged. So cyclical stocks have had a moment, and we thought that when people bought those stocks, the most difficult thing for them to do would be to move from those deep cyclical values back to growth. And many people might find themselves stuck in those deep cyclical value plays where growth stocks and digital is where you want to be for the long term.
Yeah. Hey, Romain, they've had a moment, and maybe that moment's over with 10s down at 134. If they stay down there, that moment is done.
Yeah, and it'd be... Right. Yeah, go ahead, David.
Well, that's right. I mean, it's, when you try to be very tactical in markets and try to pick stocks off the bottom, as was an opportunity for, say, energy stocks, you need to make that trade correctly both directions. If you got it right, buying some of those beaten up cyclical value stocks, great. But as I said, the future belongs to growth. The future belongs to digital. These trends have only been accelerated by the pandemic. They're not going away.
But some of the pressures, I mean, we talk a lot about some of the price pressures, the wage pressures in the leisure industry, hospitality, et cetera. We're also seeing those with some of these bigger cap tech companies as well, whether it's their own corporate hiring, whether it's their ability to source whatever they need out of the digital supply chain. I am curious if you worry at all, David, that could grow to be enough of a cost burden for some of these companies that we start to see a little bit more margin compression.
Well, the margins at the S&P have been absolutely superb for well more than a decade now. 12% net margin for the S&P, 24% net margin for technology stocks. Sure, technology companies are always vying to attract talent, but I don't think you actually have the wage pressure that you see at lower end pay businesses. And in the real economy, where there are supply chain shortages, digital businesses are meeting demand just fine. Yeah. And then when it comes to the most important ingredient of turning your business into a digital one, semiconductors are in everything. That's what's in tight demand. And we see pricing power and volume demand for semiconductors. It's just about delivering it. So the tech companies are better positioned than most when it comes to these supply chain shortages.
Right, and that's a very rational case to be made there from a financial perspective. Of course, we're having this conversation at a time where regulatory concerns are swirling here in the U.S. and abroad in Europe, and of course now apparently in Asia. And I'm wondering if that has to now sort of be modeled in some way or another into these outlooks.
It's a good question, and I think there's an opportunity in Eastern technology, China technology stocks right now. I think the opportunity there is just too big to ignore. And while we recognize some of the pressures being put on these technology companies out of China, these are strong businesses. And if you've been amazed over the years at how big these technology companies got in the United States, they're likely to only get bigger in China. So we like technology both in the US and in Asia. But I think it brings to the point, this is the golden goose of economies. And it would be wise for leaders, both our leaders and probably Asia's leaders, not to kill the golden goose that is technology.
David, final question for me. Frances Donald and Manulife arguably made, for me at least, one of the calls of the year so far. It's July 7th, and she said to me on Friday that she thinks we may have seen these cycle highs on a 10-year yield already. Do you think we have?
I don't. I do think 10-year yields climb, but they will probably climb at a pace that's slow. And when it does make them up the move to above 2%, which we do expect on 10-year yields, it probably surprises us when it occurs. And watch the legislation in Washington, D.C. I think the Fed acknowledging inflation risk, stabilizing the dollar, and this slowdown, both in the timing and in the size, the ambitious size of the fiscal stimulus packages, those being moderated has tamed inflation expectations and allowed real yields to just stay low.
Hey, Dave, good to catch up. David Bianco of DWS Group, the America's CIO. What a call that is, Tom, on Friday from Frances Donald and Manulife. Cycle highs maybe, potentially on a 10-year. Well, right now, 134.
Victory lap for those looking for lower yields. Let's start with Steve Major at HSBC, but you're right. Manulife has done it. Well, John, I think the parlor game of guessing yields is always hazardous. It's maybe a little bit less hazardous than guessing an oil price. But what I would suggest is imagine the inertial force it took to make Amazon go up 4.6% yesterday. Imagine the inertial force of the price up that we've seen in full faith in credit. Yeah. The wall of money here betting on stagflation is substantial.
You're alluding to the position squeeze one way or the other, and you mentioned Steve Major of HSBC. At the low end, 1%. At the top end, Priya Misra of TD was looking for 2% on 10s and had to cover that short yesterday. Tom, I'll be catching up with Priya Misra a little bit later on this morning.
Oh, and
a lot of people,
properties. Good.
Yeah, that'll take place at 9 Eastern on Bloomberg TV. I think a lot of people were really whipsawed by the price action of a couple of weeks back. Tom, when many people just thought that we had a position clear and a clearing of positions that would enable yields to reset and go higher again. This second move, arguably a lot more painful.
Yeah, and in Romaine, I mean, let's go to Lisa Abramowicz here and see what's happening in IG and high yield. Romaine, talk to Lisa. What does she say?
Well,
she's not on Crete.
Well, I don't know. Yeah, we'll have to get in touch with her. But I mean, look, you mentioned high yield. I mean, look, people are buying it. I mean, you're getting 3% right now at best right now if you're going into that space. And that does show that there is certainly a little bit of risk appetite still out there, despite some of the moves that we've seen over the last couple of days. It's there.
John, can it get narrow? Can it get tighter? That's a pro phrase,
already,
folks.
that's pretty tight on spreads. Here's the headline to watch going into the Olympics, July 23rd. Japanese media reporting this morning, Japan is planning
I had tickets.
A state of emergency, Tom, for Tokyo throughout the Olympics.
July 28th, I had badminton.
I'm pleased you understand the severity of that situation
I was slotted in.
for that country. Thank you, Tom.
Thank you.
43.40 on the S&P from New York City this morning. Good morning. This is Bloomberg.
Me and Karen, we're going to go see badminton.
With the first word news, I'm Rishka Gupta. In Haiti, President Jovenel Moise reportedly has been assassinated. A group of gunmen are said to have attacked his private residence overnight, shot and killed Moise and wounded his wife. That's according to the Associated Press, quoting interim Prime Minister Claude Joseph. Haiti has been struggling to recover from a devastating earthquake back in 2010. Moise had defended himself against allegations of corruptions. Biden administration officials have spoken to both Saudi Arabia and the United Arab Emirates about their standoff over oil production. The White House says it's encouraged by ongoing OPEC talks. Oil prices rose after the OPEC members couldn't reach a deal on pumping more crude. In China, Premier Li Keqiang called for deeper cooperation and communication. Li spoke during a virtual meeting with British business leaders. He said that stable relations between China and the UK can help safeguard free trade and promote global economic recovery. And the fintech company that helped revolutionize the money transfer business has gone public. Wise opted for a direct listing on the London Stock Exchange instead of a traditional IPO. That company won't raise fresh capital. Meanwhile, existing investors will be able to sell shares directly on the open market when trading begins. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
What you're going to see when you look at a map is that proportions of the population of the world that have low vaccination rates, that's where Delta is going to flare. When you look at the world and the lagging rollout and the lack of vaccination in many parts of the globe, the Delta variant is going to have an easy time running through those areas. And the goal in those places is to get their high-risk population vaccinated as quickly as possible.
And there was Dr. Amish Adalja there of the Johns Hopkins Center for House Security. From New York City this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramowicz back with us next Monday. Romaine Bostic dropping by to catch up with us, going into the opening bout. 43.42 on the S&P 500, advancing about 8 points. The Nasdaq looking good. We're up 0.2 on the S&P. On the Nasdaq, we're up by almost 5. There it is, positive 0.5%. Outside of that, into the bond market, down about half a basis point on a 10-year to 134.30 after yesterday's big move lower in 10-year and 30-year yields, Tom. We reset with a 10-year yield this morning at 134.
Yeah, we reset and we grind higher. The tape has improved here in the last hour. Right now, and this is in honor of Josh Wingrove out with that definitive article on Missouri in the United States. I put that out on Twitter. It's a big take for Bloomberg today. It's a very, very large read. Right now, on your fear of Delta, of a variant that came from India, and can you imagine if there were variants from Afghanistan, Bangladesh, Ecuador, Guatemala, India, Ghana, Kenya, Mozambique, and Ethiopia, and that would lead to the expertise of Bhakti Ansari of Johns Hopkins. To say she's Associate Professor of Emergency Medicine doesn't describe at all her international epidemic study. Bhakti, do we underestimate the Delta variant? If we're in Missouri, or for that matter, if we're in Manhattan, should we be afraid of these foreign variants?
So I think it's somewhat challenging to call them foreign variants. Variants are variants. It's just where they were first discovered, right? And variants are emerging everywhere. Should we be concerned about variants? Yes. And there is a higher likelihood of variants emerging from countries that have lower vaccination rates or lower access to resources because they have a higher amount of virus in circulation. And so we should be worried until we have a global pandemic control, we will get new emerging variants,
Doctor,
both here and abroad.
Is that something the US should be concerned about, given the vaccination levels we've already achieved?
Yes, completely. So we have to look at our sister country across the pond, the United Kingdom. The United Kingdom had similar vaccination rates to us, around 60%. Now, 67% vaccination is extremely impressive. But despite that, we have seen consistently rising cases over the last 6 weeks in the United Kingdom, with cases almost doubling every single week. I think right now we're not seeing that in the US, but there is a tipping point. Cases are on the up, so we should be wary.
Cases are on the up. Let's use the UK as a case study. Is there anything to worry about as far as hospitalizations and deaths are concerned?
So what we have found is that countries that have higher vaccination rates, hospitalizations are lower, because even though vaccinated people can get the Delta variant, and the Delta variant has been reported to be more dangerous, if you're vaccinated, your disease is likely to be less severe. Also, many countries have successfully vaccinated the elderly, those that are immunocompromised, transplant patients, cancer patients, those who are at highest risk of severe complications and death.
Dr. Ansari, this isn't totally unexpected. Even when we started down this path of vaccinations, there was a lot of talk about new variants popping up and the need potentially to reformulate some of these vaccines down the road here. What do we know about the process for doing that?
So the vaccines are currently constantly being evaluated. They're constantly trying to identify through genomic sequencing the mutations that are making the vaccine more virulent and making sure that the vaccine mRNA matches those mutations. It's an iterative process, but we know how to do this, right? We do it every single year with the flu, and every year we are prepared with a new flu vaccine. So it's not beyond the realms of our capabilities as a country.
And are we at a stage now where we have to start thinking about these COVID variants as sort of an annual shot that folks will need, presuming they're willing to take them?
I think it's likely, to be honest. I think it's very likely that this is going to be something like the flu that sticks with us, and that regular repetitive vaccinations are going to be needed. Now, flu is seasonal, which is where we have this whole annual shot. With COVID, I think it's uncertain whether it'll be an annual shot or just a booster shot as new variants emerge.
Dr. Ansari, if you were to parachute into Tokyo today and give counsel to a beleaguered government trying to do this ginormous event, okay, there are going to be no fans, let's say. But even with that, you've got many sports with multiple people involved, basketball, whatever. How do they do this given COVID? How do they do this given the fears of variants like we're seeing now in Spain, Portugal, and other places?
So I think if I was flying in personally, I'd be saying, why are we doing this, right? When your vaccination rates are less than 20%, you're putting your populace at risk by inviting individuals who may be carrying the Delta variant, which we've already seen in Tokyo with the Ugandan team. Why are we doing this? Why is it important to have the Olympics? Now, if you're going to have the Olympics, I think you would have to do universal mask mandates. I think you're going to have to restrict unvaccinated individuals from entering gaming arenas. I think you're going to have on-site facilities for immediate isolation and quarantine if someone has symptoms or is symptomatic, and then rapid, quickly available testing to be able to identify individuals who are symptomatic quickly so they can self-isolate.
Doctor, good to catch up. Good to see you. Come back soon. Dr. Bhakti Hogsati there, the Johns Hopkins Associate Professor of Emergency Medicine. Tom, last night we had 50-odd thousand people in Wembley Stadium watching a game.
Oh, there was a game last night?
There was a game.
Oh,
we
I didn't
can talk
know
about that a little bit later.
Yeah, excuse me.
The broader point is that Europe has been able to do this over the last month. If Japan couldn't do it, then they should have said a couple of months ago that they probably weren't going to be able to do it. And a lot of people have been scratching their heads about their ability to get this done in the fashion that people would like to see it done.
You know, John, what's amazing there is Dr. Hansadi of Johns Hopkins. I mean, she's world acclaimed and all that. And she stole that line from surveillance. Every morning, John, we say, you know, why are we doing this? I mean, you know, it's a surveillance question.
What is the exit strategy? What is the exit strategy if still today we are focused on
in a pandemic,
the
John.
Same thing?
Are
we in a pandemic in New York City? Do you still believe that?
Yes, I believe that.
Do you honestly believe that? With the level of deaths in New York City, Tom, you think we're in a pandemic in New York State?
We are in elements of a pandemic, but much less than other places. I go back to what Dr. Adalja said yesterday, which is just the percentage vaccinated.
Tom,
That's the one ratio we got.
Moved. If you compare and contrast the conversations we have today with the conversations we were having 12 months ago,
very different.
The goalposts have moved.
Yes.
It was about protecting the most vulnerable in society. It should have turned to individual risk at this point, and it hasn't. There is always something to worry about every single morning on programs like this, and I fear, Tom, it's never going to stop.
Well, I think the percent vaccinated will allow it to stop. That's what we're hearing from the experts we speak to.
Coming up, Evan Brown of UBS on this very conversation and what it means for financial markets. Equity futures 43.41 on the S&P from New York alongside Tom Keene. I'm Jonathan Ferro, together with Romain Bostic this morning. Your market firmer. This is Bloomberg.
.25% of the world is vaccinated, so I think this reopening story is only just sort of beginning.
Businesses have been ready to reopen faster than workers have been ready to come back.
We've missed on inflation for so long that the Fed is really focused on achieving its inflation target.
Why would you still be bearish on supply? I mean, it's going to pick up eventually.
We're going to experience something that I don't think the markets are quite prepared for, and that is a potential contraction in personal incomes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Tech stocks are looking good from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene. I'm Jonathan Ferro. Lisa Abramowicz is off today. Romain Bostic dropping by. Tom, we've got to start with the epicenter of this market worldwide, not just stateside. Your 10-year, 135. Your 30-year, sub 2%.
It's always about fixed income, a deep, deep market, and you go back to full faith and credit U.S., and John, it speaks just volumes. It is a market humbled by price up, yield down. The ramifications, we saw it really yesterday, John. Now we see it worldwide. Again, I note the Swiss 20-year positive. That was big news. It flips over. The Swiss 20-year yield negative this morning.
Tom, you're referencing nominals. I know you went straight to reals this morning. Real yields in America on 10s. Negative 1% over again.
You well said, John. And, you can look at this, folks, any way you want. You can look at the actual yield and people screaming, retirees screaming, I can't make it in yield. I got to go buy Amazon for its dividend. Or you can look at the real yield, the inflation-adjusted yield, and say that's part of the economy. John, maybe the word for end of July and August is stagflation.
Show me your equity call. And Romain, if you show me your bond market call, I can take a guess what your equity call is.
Yeah, and that equity call right now is actually that rotation, I guess, back into growth. But I mean, you have to wonder, guys, I mean, what really is being embraced here? I mean, is this really folks embracing growth, a growth story, or is this almost a sort of an anti-growth story? I mean, when you look at the flattening of the curve, when you look at the bid into the dollar, and you combine that with some of the rotation in the equity market, I don't see confidence here, and I'm wondering where this all ends over the next couple of months.
Romain, you missed my allusion there. I said the dividend on Amazon. I don't think they've got a joke. There's a little that's a little morning humor.
I get all
we
your
do
jokes,
that, Romain,
I laughed on the inside.
John and I are barely awake. But come on, Romain, it's about use of cash forward. And there's a raging debate about what are they going to do with all that cash in a boom economy.
Absolutely, Tom.
Is that the response from me?
That's my response.
Romain, it's radio. Romain, it's radio and TV.
That's refreshing.
We're used to Lisa talking until we have to shut her up.
Tom, I might adopt this strategy that Romain is taking with you. Going to get you to the price action briefly. Equity markets up 7 on the S&P, advancing to 43.41 on the S&P 500, advancing 0.17%. Outside of that, in the bond market, this really is the epicenter for all the price action that you've seen in the last 24 hours. The relentless bid in the bond market. Your 10-year yield, 134.64. The high of the year on a closing basis, 174. It was months ago. It was 40 basis points ago, and it was at the end of March, Tom. that's when your nominal peaked.
And you got curve flattening down to 112 basis points on 2's10 spread. And John, what is so important here is how all of that lays out before earnings season. I mean, what does this new yield structure mean for the banks, John?
Well, I think that's the bottom line, isn't it, Tom? Regardless of what they come out with, regardless of what the numbers look like, it will come down to where this bond market is. That will determine the appetite of whether people want to be in this market or not, and whether you believe in the narrative that justifies the moves we've seen. Once the price starts to shape the narrative, Tom, these kind of stories in these kind of markets can run away with themselves.
Abby Joseph Cohen scheduled to be with us. She will give us perspective on courage to be in the market.
Evan Brown joins us now, UBS Asset Management Head of Multi-Asset Strategy. Evan, let's just start with this bond market move. What did you and the team make of it?
Yeah, 40 basis point move lower it's no joke. I mean, I think that historically people have tried to kind of write these things off, and I think this happened earlier. This move as well is that it's technical factors, it's short covering, it's foreign investors coming in and hedge yields. But it 40 basis points is really meaningful, and I really think what the market is doing is it's reassessing how confident it is in the growth outlook. Maybe this Delta variant is a bigger deal. Maybe this excess of consumer savings is not going to be put to work immediately. Maybe it's that the fiscal impulse is going to pull back too quickly. So I think all of that, we have to take the move in the market seriously.
I like your single sentence, Evan Brown, managing risk within a volatile summer. How do I manage my need to be in equity markets with the linkage of where yield is to where the ratios are that support my confidence in equities? How do I sustain stock ownership in volatility?
I think it's about the positioning within equities. So if we are going to see a pickup in volatility, it means likely the winners that we've seen so far are probably going to have the most trouble. So it might be in financials, it might be in energy. These things can reassert themselves, and we expect they will as people get more confidence in the growth outlook down the road. But in the meantime, if we do have this volatility as the market is dealing with a change in growth momentum or a change in the policy impulse, then the previous winners are going to struggle a little bit, and the previous losers, like defensives, which has almost been a bad word up until late, the staples of healthcare, real estate, those might start outperforming over the coming months.
Well, but Evan, is this really a change in attitudes about the expectations for growth, or more about the complexion of what that growth is going to bring along with it?
Yeah, so I think it's a question of the just how strong growth is going to be. So I don't think anyone doubts that growth is going to be strong the rest of the year, and growth is going to be quite solid next year. It's just relative to expectations. We came in with expectations so high, and now there's some questioning of that. And so I think that's what's leading to this reassessment.
Evan, I just want to jump in with a call from Steve Major and the team over at HSBC on the bond market. I want to lead with this paragraph so I don't characterize their view too badly. They say the following: this means a near-term range trading strategy is likely to have better risk-adjusted return than holding a core long position. So they maintain this 1% 10-year call, Tom, and then I'll go to the quote on 174, a peak in the optimism for recovery and higher inflation. That's what he thinks we've seen on a 10-year at 174. They're maintaining this year-end forecast of 1, but that's reflecting their long-term bullish view. On a tactical basis, they've turned neutral on Treasuries, TK, this morning.
This is a really important note, and frankly folds as well from HSBC into the UBS field. Mark Hafley, I thought, with a very smart note equivalent to this, and that on a Gaussian distribution, you have tails. And Major is saying, look, we explored the higher yield part of the tail, and now we're coming down to the new tail. And he goes neutral, yes. But what I find is he states flat out, he looks at central bank hikes years off. That, to me, is profound.
Shorts are lightly covered, longs are comfortable with positions. Evan, I want you to weigh in on this that's coming from the team at HSBC. It's that distinction between a short-term tactical view and a longer-term view. How do you make that distinction on your calls right now?
Yeah, so we're always thinking about short-term and long-term, but we probably have the same view as the team you mentioned in the near-term, range-bound, but the opposite view in terms of long-term. We're looking for longer-term higher yields because ultimately we think the economy finds its footing. And ultimately, we think the Fed gets back on track with this flexible average inflation targeting. Let's be very easy going forward, and that will allow us to tighten more in the future.
I mean, this is a real. Thank you, Evan, for making comments on a rival house's view. We greatly appreciate that on surveillance. Mark Heffley wrote a brilliant note for you a few days ago. I remember seeing it, and it just stopped me about the path of the Fed. Is it a GDP foundation path? They're in a boom economy. They got to see it slow down, and then at some point they have to. It's a tip point. They have to make a decision, right?
Yeah, that's right. I mean, I think they're getting more confidence in the growth outlook. That's why we saw some of the shift last time. But really, I think for them, it's about inflation. And it'll be really interesting to see what the minutes bring out later today, because it was clear from the summary of economic projections that more and more members are concerned about the risks to the upside of inflation. Now, there's a lot to be worked out here. We know we have these supply constraints. We don't know how quickly labor is going to come back and how quickly all of this will be resolved. There's also the possibility that you get these supply constraints and they last longer than we think, and transitory becomes more permanent, right? It becomes embedded in expectations, and there's this feedback loop between higher inflation expectations and higher inflation. So really looking in the minutes on how they characterize that later today.
Hey, Evan, good to catch up. As always, send our best to Luke and the team. Evan Brown of UBS Asset Management, the head of multi-asset strategy. Just to reiterate then, Steve Major maintaining that 1% year-end call on a 10-year Treasury, just on a short-term tactical basis, turning a little bit more neutral on the Treasury market. Coming out of the UK, some headlines from the Prime Minister I want to bring to you from Boris Johnson. The UK has severed the link between COVID cases and deaths. I repeat that. This from the Prime Minister speaking in Parliament. The UK has severed the link between COVID cases and deaths. And Tom, that gives you an idea of the change in policy, the change in emphasis that we're getting out of the UK more recently.
I'm baffled by it. I mean, he's as much of a scientist as I am. I have no idea what that headline means.
Well, you follow the data, don't you? The cases are exploding and the hospitalizations and deaths are not.
They are not, because the older people have all gotten vaccinated. The pros we talk to are heated about this, that even in the southern states of America, the older people have gotten vaccinated at a very responsible rate. This is about younger and middle-aged people,
Totally agree.
John.
And therefore, you have achieved the severing of the link between cases and deaths. That's the conclusion from everything we've just said, isn't it?
And are we supposed to feel good about that, though?
We should feel very good about severing the link between those two things. They are the two things that we were trying to do over the last 12 months to get us going back to living a normal life and treating this particular disease like any other seasonal flu that we might get. This was the objective.
That's the objective, John, but societies like Australia, Spain, Portugal, and others are
who have to work through.
Now.
They have to work through the same vaccination process, Tom, and hopefully this is the end point. This was the case study right now, together with Israel. These are the data points we want to see. If cases explode, do deaths and hospitalizations? Now, maybe they will, but right now, you don't see that in the data, and the Prime Minister is saying the UK has severed the link between the two things.
John, can I look at the equity tape and say I believe I see a melt up?
We're up 0.55% on NASDAQ 100 futures.
It's just up.
We're doing okay. In the next hour, Wei Li of BlackRock, the global chief investment strategist from New York City this morning. Good morning. Equities firmer on this Wednesday. This is Bloomberg.
Is there a soccer game?
With the First Word News, I'm Rishika Gupta. The president of Haiti reportedly has been assassinated in what was described as a raid on his home by a group of attackers. According to the Associated Press, Jovenel Moïse was shot and killed and his wife was wounded. The AP quoted Haiti's interim prime minister, who said some of the attackers were speaking Spanish. There's been growing public anger in Haiti over Moïse's attempt to hold on to power and rewrite the constitution. There are multiple reports that Japan is preparing to declare a new state of emergency in Tokyo. That would mean the Summer Olympics would be held without spectators. Earlier today, Tokyo reported the most number of new coronavirus cases since May the 13th. The European Union has raised the outlook for the region's economy. The forecast for this year was boosted from 4.3% to 4.8%. That was accompanied by a warning of a higher risk of inflation taking hold because of increased demand. And President Biden will take on the rapidly growing threat of ransomware against companies and local institutions. Over the weekend, there was a ransomware attack blamed on Russian hackers that affected more than 1,000 businesses, with victims in at least 17 countries. The president will meet with agency leaders today to discuss administration strategy. The White House calls it a national security priority. And in soccer, Italy has reached Sunday's final of the European Championship. The Italians beat Spain 4-2 in a penalty shootout after a 1-1 draw. They'll face either England or Denmark, who square off today in the other semi-final in London. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ruchika Gupta. This is Bloomberg.
The thing that worries me most is still us. What still worries me most is how divided this country is, how our democracy is under assault from within. We're still unable, for the most part, to come together to deal with some of the challenges facing this country, even beyond infrastructure.
That was Richard Haas, the Council on Foreign Relations President from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro, together with Romain Bostic this Wednesday. Your equity market looks like this: 43.42, up 8 points on the S&P, advancing almost 0.2%, up 86 on the Nasdaq 100, advancing now by almost 0.6%. A nice lift for big tech off the back of this move in the Treasury market. Yields are lower again, 133.80 on 10s. Yields is just relentless now, Tom.
Yeah, relentless
Yields
is
lower
relentless
on
is the right
10s.
word. Yeah, no question about it, John. In the equity market, relentless is just simple. The bid is there, it's sustained, and through the 3 hours we've been looking at it this morning, Romain's only been looking at it for 2 hours, 1 minute. But other than that, the bid is sustained there, with NASDAQ up almost 0.6%. We've looked a lot at the pandemic this morning. Emily Wilkins on the brutal truth, which is the computer system of Washington is archaic, it is a failure, and it puts soldiers at risk every single day, sailors at risk every single day, because they're not in the cloud. What's the backstory, Emily, on what we saw yesterday from the Pentagon? Is this the Secretary of Defense who's just furious over this computer debacle?
What we saw yesterday, the huge news that the Pentagon's $10 billion contract to Microsoft Corporation is actually now set to be divided, a new contract between both Amazon and Microsoft. And this is something that the Pentagon says it needs in terms of defense, in terms of security. We still don't know yet all the final details. I mean, Amazon's going to have to submit a proposal, and there's the opportunity for other cloud corporations to become involved in this as well. And so at this point, I think we're watching pretty closely to see what is going to be suggested. We also have the statement on the screen about the RNC hacking that occurred yesterday that Bloomberg reported on. That goes along with a number of other ransomware hackings that are occurring around the U.S. President Biden today said that he would be meeting with a group of advisors behind closed doors about how to really address these hackings. I mean, this is something that he discussed with Russian President Vladimir Putin at their meeting last month. And yet now this month, we're seeing hackings again that are related to groups that are in Russia.
Is this a part of the infrastructure push now, Emily? Is there a renewed effort on this front?
To a certain extent, yes. I mean, cybersecurity, there are pieces of it that are in the overall infrastructure and then wider reconciliation plan. Obviously, those two bills are still coming together. The details are being hammered out by lawmakers who are not currently in Washington this week. So we're not expecting any major news on that front. But that is something that they are looking at, particularly as we're seeing not only companies, but also the federal government really be impacted by these level of hacks. I mean, the RNC is on the news today, but the DNC, the Democratic National Committee, they have been hacked in the past as well. So this has been a one-on-one party thing.
You touched on it briefly just then. Let's build on it. Where are we with infrastructure negotiations, with the talks, with the effort? Where on earth are we now?
So President Biden is headed to Illinois today, to a suburb of Chicago, to continue making the case for why an infrastructure bill is needed, and not just the bipartisan infrastructure bill, but the wider so-called human infrastructure elements, healthcare, childcare. Biden is still really needing to make that pitch to the American people as negotiations to go on, to show up support. One thing the White House has really loved to do is point to polls that's showing how popular President Biden's plan is. And so a big part of this plan is for him to sell it. At this point, we are waiting for further details. We're waiting for lawmakers to write and release the language, really showing the details of these bills. And that part is all being negotiated behind the scenes right now, as various lawmakers are vying for their top priorities to get into this legislation.
Well, right, that's right, Emily. And now we're sort of bumping up against budget season here. And I'm wondering if maybe some of the proposals that are part of this infrastructure deal end up being obscured or even maybe just absorbed into the broader budget discussion in a way that maybe blunts the impact that the White House had intentionally looked for.
I think that's why President Biden is in Illinois today. I think that's why we've seen him travel the country in the last several weeks, and expect him to make more stops, continuing this pitch and continuing to talk about it. I mean, yes, the federal government's doing a lot right now. They're working on the budget. They're working on the defense reauthorization. They're working on the debt limit. But one thing that Biden wants to make sure isn't lost in the noise is what they're doing on infrastructure, in part because Democrats are hoping that what they do translates into a win for them in the upcoming midterm elections.
All right. And Emily, I have to ask you to about yesterday, of course, a grim anniversary of 6-month anniversary of that insurrection of our Capitol building here. Still efforts in Congress to actually have, believe it or not, a real formal investigation of what transpired on that day. Is there any sense here that more Republicans are willing to join this commission?
Well, CNN actually did report this morning that House Republican leader Kevin McCarthy is going to be appointing Republicans to the select committee that Democrats established the other week. Remember that committee, it's going to be 8 Democrats, 5 Republicans, or rather, I should say 7 and 6, because Democrats asked Liz Cheney to be on the committee and she accepted. There are a lot of debate about exactly how effective this committee will be, since it is partisan in favor of the Democrats. But look, the committee has ability to call witnesses. They have the ability to hold hearings, and they have the ability to really dig into this matter further and continue to dig into it, because there's no deadline on this committee's work. So we could see the committee well go into next year with their discussion and investigation of the events of January 6th.
Emily, good to catch up. Emily Wilkins down in Washington, D.C., thank you. One subject we didn't touch there, and we haven't touched on all morning. It's important. Remain, just how focused are you on the team and what's been happening with Didi and what China is up to over the past week?
Yeah, we're very focused on this. This was all the talk yesterday. It's still all the talk today. The idea here that not only are Chinese regulators starting to rein them in, but I think the reassessment by a lot of U.S. investors and non-Chinese investors about whether you want to stay invested in these companies with that cloud are still hanging over them right now.
And now a question mark as well remain. And TK, over this variable interest entity framework that was introduced a couple of decades ago to allow some of these Chinese firms to list in the United States. There's some pushback there too. And what I find amazing about this, there are certain senators down in Washington, Senator Rubio, who have made a big effort to do something about some of these Chinese companies listing here in America. And now it seems that the Chinese authorities are making that decision for them.
Yep. Yeah, I totally agree, John. I really take issue with the headline stream yesterday. To me, this was all about Beijing. It was all about politics as well. We had the Weibo fiasco with Reuters, and then others up and down we went. And John, I just think you're absolutely right. This is the federal politics of China preempting all.
Tom, are you surprised you haven't heard more from Washington? That a foreign company came to the United States, tapped the capital market for a significant amount of money, and then the Chinese Communist Party made its move several days later to clamp down on that company.
I don't think it's on their radar, John. They're worried about other things like trying to get the primary season started in 2022. Yeah, I take your point. They should have said more about it. Maybe Gary Gensler will say something about it at SEC.
Coming up, Abby Joseph Cohen of Goldman Sachs, the senior investment strategist. What a timely conversation on what feels like, I know for many of you, somewhat of an inflection point in this market. 10-year yields 133.63. We're down a basis point from New York on TV and radio. This is Bloomberg. Live from New York City on TV and radio, here's the price action this Wednesday morning. Good morning. Equity futures 43.41 on the S&P, advancing a little more than 1/10%. You'll notice where the outperformance is, though. So the Nasdaq 100 advancing there 86, up 0.6%. The why? We need to go to the bond market for the why for everything in this market at the moment. That is the epicenter of all the price action. Let's start with nominals. 133.97, just south of 134 on 10s. 40 basis points to go. That was the top of the year. On a closing basis, 174 at the end of the March. I keep going back to the end of the first quarter. That is when yields peaked on a nominal basis so far this year. 30s, a sub 2%. But nominals don't get it done. You need to look at real yields for the move that took place in yesterday's session. Switch up the board and get to this. Your 10-year real yield, a nice round number, negative 100, negative 1%. Just what is going on here? I think February holds a clue. In February, in the middle of February, we had this explosive repricing of growth, reassessing the future and the cyclical impulse of this economy. Yields, real yields, much higher. That was a growth shock, a positive growth shock. And now we're rolling over. So what does that tell you, TK? And this is what a lot of people are confused about right now, because the data still looks good. The ISM, for goodness sake, is still north of 60. That's fantastic. But we're focused on rate of change right now and not levels. Not cumulative gains over the next couple of years, but what those numbers look like. And the deceleration from what we were expecting in Q1 to what we're now talking about in Q1 of 22.
I like what Robin Wigglesworth said over at the FT today, John. It's all about the narrative, and we all have our narratives and stories, and mostly, John, it's about the humbling here of certitude when you look back 5-6 months.
And what determines narratives, Tom? What shapes them? Price. It's always price. And when you get two moves like this, out of the back end of the Federal Reserve meeting a couple of weeks ago, and the move we had yesterday, that's the kind of price moves that are aggressively going to reshape a narrative and very quickly. And wouldn't you agree, TK, that's what's happened now over the last day? What happened to the energy bulls, the bank bulls? They go very quiet when you start to see a bond market with a yield sub 140 and a real yield of negative 1.
And to your point, John, as you started out this data check, it is about what changed yesterday, folks. What changed yesterday was that mixture of nominal and inflation guesstimates, and it was a real yield that was literally a jump condition.
So that's the epicenter of this market. We've got to talk about some single names because big tech has had a lovely little run over the last week or so.
Yeah, absolutely. And that lovely little run is partly because of that board that you just had up there with that real yield at negative 1% here. That's given a little bit more impetus to sort of rotate back into some of those big cap tech stocks here. You talk about Apple, you talk about Amazon hitting a record high yesterday. You talk about Google hitting a record high, Alphabet, I should say, Microsoft as well. And you take a look at Apple today, 143.18. Keep in mind, Apple's all-time high, that was set all the way back in January. So it's a little bit of a relative laggard here. 143.16, that is all-time high. It came within a penny of that yesterday. Of course, trading in the pre-market, slightly above that today. All of the big cap tech names right now up about a percentage point or more here in the pre-market. Flip up the board because the other talk of the town still continues to be some of those Chinese ADRs. You're seeing DD down for a third straight day here. Full Truck Alliance, of course, YMM, that's the big sort of Uber-like ride-hailing service for freight trucks. That's down a second day. But I want to turn your attention to Xpeng, and this is something that Tom actually touched on a little bit earlier. The idea of a lot of these companies selling shares here in the United States. A lot of these companies now are starting to go back home. Xpeng had a so-called homecoming listing today over there in Hong Kong. The trade ended flat on the day, and it's interesting because the sort of impetus for doing these homecoming trades was because of the potential for U.S. regulation and U.S. scrutiny. And, of course, now the concern here is that it's really the Chinese scrutiny that may call a lot of these companies back home to China and, in some cases, maybe back into the private market.
Maybe back into the private market, but also, John Farrell, back into a central bank that is acting as part of the communist experiment in China. Those are stunning headlines, John Farrell.
Yeah, coming from the State Council, Tom, raising the possibility of an RRR cut, the required reserve ratio cut to aid the economy, some support for this economy. Let's be clear, Tom, reopened first, recovered first, and that recovery has really started to mature in a way that the U.S. economy quite hasn't just yet.
Some of the international back and forth now, and it leads to, without question, our conversation before earnings season. Abby Joseph Cohen has been a partner since Goldman Sachs, since I think it was 2008. I can't remember. It's back a few years. She is their advisory director and senior investment strategist, and arguably no one has ordered America to participate in the equity markets like Abby Joseph Cohen. We're thrilled she could join us this morning. Abby, reaffirm this morning why we need to participate in the stock market given the sum of all our fears.
Tom, well, good morning to you, and thank you for inviting me to be here today. What we know about the stock market over a long period of time is that if you have confidence in the economic outlook, equities are usually the best place to be. And clearly that has been the case now for an extended period. And I think that one of the important things for investors to think about now is valuation. You want to participate in equities, but you want to make sure that you're doing it at the right price. And one of the things that you and your colleagues have spoken about very clearly already this morning is that interest rates may be becoming less friendly than they have been towards valuation. When we look at the valuation models that are used by so many investors and so many analysts, including those at Goldman Sachs, there's this general sense that the market is roughly at fair value. And that sounds like, not bad. If you believe that this will in fact be a protracted economic recovery and then expansion, not a bad thing. However, we're sort of on a knife's edge. The valuation becomes less appealing if interest rates rise. My colleague David Costin, who does this specific forecast, has been saying for a while now that he thinks that fair value for the S&P 500 this year is 4,300, which is pretty much where we are. One more point, and that is when you're at fair value, there's no margin for error. If there are disappointments, be it on interest rates, the disappointment on OPEC, for example, over the last few days, that's where you start to see a big increase in volatility within the market itself.
So many would say, Abby Joseph Cohen, that none of what we're living right now was in your economic textbooks at Cornell a few years ago. For example, and I do this for my colleague John Ferro, how do you respond to the confidence to invest given this colossally odd negative real yield?
Great question that we're asking ourselves as well, Tom. And the answer is carefully, very carefully. We are in an unprecedented period, both with regard to an extended length of time for these negative real yields. By the way, there have been negative real yields in Europe now for quite a period of time. And we are also in an unusual period with regard to nominal interest rates. So when we run our models, we're looking at both those nominal and real yields and recognize that we truly are in uncharted territory. So let me say one more thing as somebody who used to be a quantitative analyst. I like to say I'm a reformed quant. I use these models as a starting point. I don't use them as gospel. I use them to give me some direction. Are we undervalued, fairly valued, overvalued? And then once we have that general sense of direction, what could go wrong? And what could go right? And as we take a look at things now, the things that could go wrong include commodity prices. We've seen what OPEC has done. This, by the way, could be more of a problem for markets outside the United States. In the U.S., commodity prices are actually a fairly small component of our total cost. The second thing that I'm perhaps even more worried about has to do with public health. We've had these incredible vaccines, extraordinarily effective, and now we're sort of bumping into problems with regard to distribution. In the United States, we think this will be a regional issue rather than nationwide. Yeah. But when we take a look at the reopening of places like Europe, this is much more problematic. The distribution in Europe of their mRNA vaccines really has been lagging. It's one of the reasons that the GDP expectation in Europe, continental Europe, is below what we would have liked to see.
And John, you've absolutely nailed that on world travel or the lack thereof.
Well, the airlines have suffered because of that, Tom. And a cyclical story in many ways, sector to sector. The airlines have peaked. In the minds of some people, they're struggling now. The banks are starting to struggle a little bit as well over the last month. Abby, what was interesting in your response to Tom is that you turned to your process. And for the following question, I'm less interested in the call and far more interested in the process. The debate right now on the cyclicals is the debate it's always been over the last 6 months. Is it just a short-term reopening trade or something more durable, something more sustainable? What is your process to distinguish between the two things? What are the signposts you look for?
Well, we're also looking at the idiosyncratic opportunities because just because a particular company happens to be in a particular sector or industry, according to the S&P definition, doesn't tell us as much as we need to know. So we're really looking at how individual companies have positioned and or repositioned themselves. I happen to believe that there will be a movement ahead in CapEx. We think there will be an infrastructure bill of some sort. Obviously, we're not privy to the negotiations now in the Congress. We think there's a desperate need for spending on infrastructure, but there's also a need for private engagement in CapEx. One of the things that we have seen in the last decade or so has been this decline in the use of corporate cash flow for these purposes. We have seen much more of it than usual go into things like dividend payment and share repurchases. Those dividend payments may continue to increase, but if you are a corporate CFO and you look at your current share price, you say, do I really want to be repurchasing at these levels? And that's one thing that, in addition to the need to expand fiscal capacity, may in fact lead to improvements in CapEx. So the short answer to your question, John, is we do think that there will be a movement towards some of the industrials. And let's recognize that industrials are all over the lot, and we need to look too at the international trade aspects of this. Some of the companies that have repositioned themselves well for the 21st century needs, including things like renewable energy, more efficient processes, the use of improved metallurgy, and so on. Some of these are U.S. companies. Some of them are outside the United States, but are important suppliers to U.S. companies.
Do you think that the impetus, though, for some of that CapEx spending and the potential for that to finally sort of maybe get back to levels that we saw in previous generations, that that's going to come completely at the behest of these companies, or do you need a little bit more government involvement to sort of move this along, Abby?
Yeah, well, let me be careful when I discuss the numbers here, because I don't think we're going back to where we were 20 years ago as a percentage of the total use of cash flow because of the change in the composition of the S&P 500. We now have so many more service-oriented companies that are not heavy-duty industrial spenders. So we need to be looking at things industry by industry. So I do think that there will be a movement back towards more CapEx. The thing that worries me most about government spending has been the significant de-emphasis of spending on things by the government that corporations don't usually spend on. And let me be more specific. And that is over the last several decades, in fact, going back to 1860, the US government has been one of the major investors in long-term basic research. And what we have seen over the last 20 years has been a decline in basic research spending as a percentage of the federal budget. I think this is a mistake. You know, we have to keep in mind, for example, that those terrific mRNA vaccines that we all are so happy to have now, that initial research was done by spending given by the NIH 10, 15 years ago. We forget...
Abby, you get that call. It's going to be David Costin.
That's David Costin.
David's very worried you might make a call because David Costin right now is 4,300 year-end, TK, and we couldn't be more bored by that. Right now we're at 43,
well,
42.
I have to tell you that was my granddaughter calling.
What did she say?
It's her 6th birthday today.
Oh.
So,
Abby, why don't you just take the call?
Abby,
just take the call.
Abby, take the call,
Just take the call.
please.
Just say hello. Say happy birthday.
I will call her in just a minute.
We're going to let you go, Abby. It's good to catch up. We think this is more important. You want to make a more important point than saying happy birthday?
I'm going to sing happy birthday to her, and you don't want to hear my voice. So basically, the federal government has been the basic provider of funds for research, but also for infrastructure. And we have seen a notable decline in that over the last 20 years. We just need to get back to where we were. And that would be extraordinarily helpful for long-term economic growth.
Abby, thank you. It's good to catch up.
Always
Get on the
eventful.
phone. Get on Skype. Abby Joseph Cohen there, Goldman Sachs Advisory Director, Senior Investment Strategist. David Costin right now over at Goldman, Tom, 4,300. With air.
Let's talk about this, John. I mean, David Costin, 4,300. You know they're going to look at earnings and the cash flows Ms. Joseph Cohen speaks of and go up. Tony Dwyer, you got to be in the market.
Yeah.
To me, the great call, John Ferro, on this show, John Golub published and said, you got to stay in techs. You can't ignore him. To me, John Golub's call is arguably the call of the first half.
Over at Credit Suisse, having a little
Ben
look
Laidler,
for
killing
4,600. The top end on Wall Street. The medium right now remain 4,300 on the S&P year end.
Yeah, and I think that's going up too. And a lot of people talk about the disconnect right now between the S&P 500 and the rest of the economy here. The S&P 500 is out in front of that, and those numbers, they have to come up.
Coming up in the next hour, Rick Mishkin, the Columbia University Professor of Banking and Financial Institutions and former Federal Reserve Governor from New York. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. The president of Haiti reportedly has been assassinated. According to the Associated Press, the country's interim prime minister says that gunmen killed President Jovenel Moïse at his private residence and wounded his wife. Haiti has grown increasingly unstable since Moïse took office in 2017. The Biden administration officials have spoken to both Saudi Arabia and the United Arab Emirates about their standoff over oil production. The White House says it's encouraged by ongoing OPEC talks. Oil prices rose after OPEC members couldn't reach a deal on pumping more crude. Hurricane Elsa has weakened to a tropical storm in the Gulf of Mexico. It's expected to make landfall today north of Tampa. The storm's top winds reach 70 miles an hour. The concern is that Elsa could push a dangerous storm surge into Tampa Bay, raising ocean levels up to 5 feet. In New York City, former police officer Eric Adams has won the Democratic mayoral primary. That makes the Brooklyn borough president the overwhelming favorite to be elected mayor in November. Adams held off former sanitation commissioner Catherine Garcia by 1 percentage point in the ranked choice voting. Shares of fintech company Wise rose as they began trading in a direct listing on the London Stock Exchange. It's the largest such deal ever. The money transfer company opened at a price that gave it a market cap of almost $11 billion. Wise is following U.S. tech companies by offering existing shareholders extra voting rights. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
So inflation's going to moderate, and I think that's going to, provide some sort of temporary relief to some of the doves on the committee. But I think the bigger issue is that we're transitioning from really one inflation story to the next, right? The Fed doesn't get a chance to catch their breath.
Isn't that the truth? Neil Dudder there, Renaissance Macro Research Head of Economics from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Together this morning with Romain Bostic. Lisa Abramowicz out all week. She'll be back with us on Monday. Here's the price action. Equity futures up 7, call it 8, advancing 0.17% on the S&P, bouncing back to 43.41. Outside of that in the bond market, that's your headline, 134.80. Off the highs of the year on a closing basis of 174. We are 40 basis points south of the highs of the year. And here's the killer line from Steve Major and the team over at HSBC. The market is increasingly sensing that yields may have already peaked this year. That from Steve Major and HSBC earlier this morning, Tom.
And some optimism on cash flow from Abby Joseph Cohen as well. Right now, David Wilson, and this really dovetails in, John, on our fashion front. We noted earlier that Lady Gaga has called pink this summer's color. And David Wilson does something that we used to do routinely in the investment world, which is go to the pink sheets, or now the so-called OTC market. We don't talk a lot about this like we used to, do we?
No, we don't. And that's what made it interesting to see it pop up in Manish Despanda's latest report out of Barclays. Now, he's talking about signs that speculation has peaked in U.S. stocks. Looking at cryptocurrencies as part of that, looking at meme stocks as part of that. But beyond that, looking at over-the-counter stock indexes. You have something called the OTCQX composite, which really kind of covers the waterfront in terms of that market. And then you have another index called the OTCQB that focuses in on some of the more speculative companies. Now, they behaved a bit differently over time. We've seen the OTCQX, interestingly enough, basically track the S&P 500.
Yes, moonshot off the pandemic low.
Absolutely. Lately, though, it's pulled back as much as 4.3% from a high in the middle of last month. Then there's OTCQB, which peaked in February, down as much as 20% from there. So we've really seen the speculation come out of that segment of the market.
You and I know people lived in the pink sheets years ago, and the answers are sitting on their couch now, running GameStop or whatever the meme stop is at the moment. Are the pink sheets dead because everybody else is playing roulette on their couches?
Well, I mean, they were playing roulette on their couches, so to speak, in January and February when these stocks were taking off. So, what we're seeing in terms of, things kind of settling out with the likes of GameStop and AMC Entertainment and other stocks is really being mirrored in what's happening in the over-the-counter market if you look at those indexes. And that's the point as much as anything. They're both kind of telling a similar story in terms of speculation fading, at least to Despanda.
All right, Dave, every day I look at the volume in this market and I try to sort of discern whether, are people still active in this market, whether there is sort of broad-based support for some of these record highs that we've been hitting pretty much for the past couple of weeks here. What are we looking at?
Well, I mean, volume's kind of tailed off a bit, no question. But, we're getting ready for second quarter earnings reports to come out. And if nothing else, I mean, that provides a focus for, the next several weeks and may encourage at least some trading here. That said, I mean, you've got a market that's hanging in at record highs. If you look at the S&P 500, a succession of records over the last couple of weeks. So, it's not like the volume is really telling that much different of a story yet to what we're seeing in terms of prices.
Dave, just briefly, DD getting knocked around again this morning in the pre-market. We're down about 4% here. Have you got a take on what's happening with some of these Chinese companies listed over here in America?
Well, it's very simple. The government's talking tough that they're planning more regulation of those companies. And that's the sort of thing investors just don't like. Let's face it. I mean, Didi's kind of the poster child at this point for that tougher approach. But to the extent, it carries over to the likes of, say, Alibaba or JD.com or Baidu or any of these other companies, I mean, you have to be concerned about what happens to their business going forward to the extent that they face more regulatory risk.
Dave is going to catch up. Dave Wilson, our stocks editor, on some of the themes in this equity market right now. And I think it's a conversation we've got to have for the Chinese companies listed stateside. Tom, just how investable are they right now? And what's the balance of risk around them?
Done.
You think it's done?
I think it's done. Why do we think Beijing's going to budge? Is there any delusion almost that they're going to budge? I don't see it. Everything we've heard from President Xi for X number of years, from all of the Chinese scholars, is they've made a decision. They're going back beyond Zhou Enlai towards Mao.
I've got no idea. And I find it difficult getting in the mind of a policymaker at the best of times to work out what they're thinking. And when it comes to the Chinese Communist Party, Remain, I actually think they've been pretty open about it this time.
Yeah.
Not happy, are they?
Yeah, and they've been consistent about this. So I think a lot of people seem, at least appear to act shocked about this. But they've been relatively consistent about this idea of where the guardrails are for some of these companies. It's just that some of these companies decided to test those guardrails, and we're seeing them being pulled back a little bit here.
Remain, can't you see John Ferro at Sun Valley?
At Sun Valley?
I'm thinking like a black turtleneck thing going with maybe a little blazer thing, or
a black turtleneck.
John doesn't strike me as a black turtleneck
black
kind of guy.
Blazer kind of with the.
Do you ever wear anything other than that black suit and tie? I assume that's his weekend wear as well.
No,
this is all I wear. Tom, all he wears is a bow tie.
Bow tie.
This is what people are familiar with. This is it.
Yeah.
Why wouldn't you wear what people are familiar with? You don't want to disappoint them, Romain.
It was okay. I didn't realize.
Imagine
Got a
if
lot
they
to
saw
live
you
up to.
outside of the suit,
Nobody
out of the
recognizes
suit.
me on the street. Tom's recognizable. Everyone recognizes.
Tom encourages the recognition.
Yeah. Does he?
Let me tell
He
you.
just goes and stands out on 59th
If you're
Street
ever in a bar with
and just
Tom,
waves his
he
arm.
encourages the recognition.
Can I recommend that we send Ferro to Sun Valley next year?
Do you just want to get rid of me,
Killing
Tom?
it,
Is that what's
but-
going on here? You want me to go to... What would you like me to do in Sun Valley? Do you want me to be the journalist?
Not step on a
or do
rattlesnake.
you want me to go and do some yoga and go on one of those hikes?
Yeah, you could do that. I mean, I'm sure that there's a yoga session going on with the
Tom, did you watch Succession?
No, you know, I've never watched
You
it.
really
I'm
need to watch
sorry.
Succession. They go to a version of Sun Valley, and they
Yeah.
seem to be a great time.
Yeah.
I
There's
think
a lot
we've
that
been
went
on
down
it, John. I think, like on the TV screens of finance, like Billions and all that, I think we've maybe made an appearance.
We have on Billions, yes. On Succession,
Billions.
on
Maybe
Succession,
not
I think
Succession.
briefly as well. I don't know why we're talking about this. The trailer for the new Succession season is out. I believe Succession season 3 comes out.
It is
in
out.
Q4 of this year.
And of course, as we look at the quality theater of Billions and Succession, John, we've got to go to the new Love Island. Thoughts, John?
Oh,
I haven't watched it yet. I think it comes out on Hulu next week, maybe.
Oh, good.
For the UK version. Just for people who want to catch up on what's happening.
Yeah. Oh, I'm
in
back
season
watching
7 of Love
reruns.
Island UK. Believe it or not, this is Bloomberg TV and radio, and your market's at 43.42.
We're
on the
loving
S&P.
the markets.
We are. Heard on radio, seen on TV, with your equity market advancing and yields holding these levels south of 140 on 10s. What a move. This is Bloomberg.
The data is good right now. The problem is that it's not good enough.
25% of the world is vaccinated, so I think this reopening story is only just sort of beginning.
Businesses have been ready to reopen faster than workers have been ready to come back.
A lot of these businesses are truly challenged, whether it be certain retailers or commodity producers. This infrastructure package is not going to be as big as many people have hoped.
I really think what the market is doing is it's reassessing how confident it is in the growth outlook.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. A simulcast. It is on radio, it is on television, and it is a most surprising market. Romain Bostic in for Ms. Abramowicz and John Ferro looking at this market and a really important conversation coming up. It is a raging battle about what to do in the stock market.
Well, I said earlier on this morning, Tom, show me your bond market call, I'll guess your equity call. Right now, let's get to that surprise. The epicenter of all of it is a 10-year yield at 134.
Yep.
Who was looking for 130s in the middle of summer after the growth figures that we've had in this country? Who was looking for a 30-year, sub 2%? Some people were, but that was not the consensus view. And those positions got hit once a couple of weeks ago. When they were put back on, they got battered again yesterday.
And what's, the real yield right now, folks, a 10-year duration, negative 1.0023% says it all. Romain Bostic on the equity front, it is a raging decision between being U.S., not, or even more so, the idea of maintain a cyclical view or get back on board Amazon and its brethren.
Yeah, I think you're seeing a little bit of a reassessment of that cyclical view, sort of go for the growth stocks, which are kind of by default the safety stocks, the defensive stocks, if you will, in this new era here. But you talk about the rotation that we saw a little bit earlier in this year. It wasn't only to U.S. cyclicals. We saw that rotation actually creep out into some of the emerging markets. We saw it creep out into Europe and seeing those stocks hit record highs, and even into Asia here. And you have to wonder whether that gets pulled back, whether this is about concerns about the Delta variant, whether this is about concerns about regulation, or whether this is simply a reassessment that the growth that we're getting, the economic growth that we're getting, is going to come with a little bit of baggage.
We're going to have a little equity guest here in a moment coming on the heels of Abby Joseph Cohen with a very different view. John Ferro, let's sit on the bond market for a moment, do the math. Nominal yield, less inflation expectations is that stunning larger negative real yield. On inflation expectations, it's jump ball, isn't it?
It has a minus and then a 1 sign for real yields. That's the story in yesterday's session. It wasn't inflation expectations.
I agree.
It was a drift lower in real yields. And what we have to grapple is why? Why did that happen? Is it really about the deceleration you're expecting into next year, the year after? Is it de-risking? I didn't see de-risking in the equity market. I just saw the reversal of the rotation in the equity market. Feels like a little bit of a negative growth shock, a reversal of what we saw in the first quarter, which was a positive growth shock, higher real yields, cyclicals outperforming. All those stories, one by one, have topped. And it started with the bond market. Started with nominals peaking at the end of the first quarter. The yield curve did along with it. Started with break-evens in May, peaking then as well. And then it started to chop through the equity market a little bit more. Energy and financials starting to underperform. Big tech outperforming.
Right.
You see that on the NASDAQ 100 again this morning. They're up there by, 89 basis points, 89 points rather, up another 0.6%, Tom.
Let's go through the data quickly. FX gives me nothing this morning. Oil pulls back a little bit. Gold, 18.08 an ounce. Equity markets, I've got some movement. SPX up a nice 0.3%, 11 points. NASDAQ on a tear, up 0.6%. And John, it's the way the NASDAQ's up that's important.
And yields are lower with it. That's the driving force. 133.63 on 10 to just get your attention. And a lot of people are starting to make the call now. We keep saying this, price shapes narrative. Price shapes narrative. Narratives don't shape price until price shapes narrative. And that's what's happening. Steve Major of HSBC has been bullish the bond market out this morning, saying maybe people are getting a sense that this story has peaked. Frances Dollard of Manulife, she made the call on real yield on Friday, Tom, that she thinks we've seen a cycle peak in a 10-year yield already. Whatever your view on all of this, you start to see the tide moving and people start to build on it. And that's what's been happening over the last several weeks.
And the opening of an economy, and we just saw that in spades with Abby Joseph Cohen and her 6-year-old granddaughter interrupting the show worldwide. Miss Joseph Cohen sends her apologies and says this was a kindergarten experience this year for her granddaughter that was done entirely by Zoom. It is an opening economy. Wei Li joins us from BlackRock, their global chief investment strategist. Wei Li, you have a fascinating view, and it is so much avoid the U.S., lighten up on the U.S., and look in other places. Let's start with your caution on the United States. Why?
I would caveat it by saying that it's not so much as a caution on the U.S. As much as it is a view that the next leg of this cyclical restart trade can be better played in other regions, the likes of Europe, the likes of Japan, where restart is broadening out. So you talked about peak growth. Yes, we have seen peak growth acceleration in the US, but that baton of growth acceleration is getting shifted from the US to Europe, to Japan, which are the areas that we're becoming more favorable of in this environment. But now you say that we have lowered our conviction on US equities. Yes, we have. But at neutral, it is still 60% of global equity benchmark. It's still the largest part of our investors and our clients' equity portfolio allocation. And we continue to think that the broader backdrop of above trend growth and very negative real rate should still support a broadly pro-risk environment. So yes, we're upgrading Europe, we're upgrading Japan at the expense of lowering our overweight in US equities down to neutral. But more broadly, it's really a reaffirming of our view, stay invested, and we still want to be pro-risk.
Well, I hear the call on the European economy. The United States opened before Europe, it recovered before Europe. It makes sense that Europe would lag and they'll take the baton and do everything you've just described. The equity market didn't. The Euro Stoxx 50 outperformed the S&P 500 in the first half, and that's where people are a little bit unconvinced of the trade right now. They understand the economic framework. They're struggling with the market call. Can you convince them?
Absolutely. Well, I hope. If you think about kind of on a year-to-date basis, yes, European equities have done very well. But if you compare the performance since pandemic low, so talking about back to last March, European cyclicals are still lagging US cyclicals quite a bit. So we're talking about still quite some room for European cyclicals to catch up with their US counterpart coming out of the pandemic. So it's not time horizon matters. It's not just this year. And I would also say that in terms of European equity views, we do think that the growth restart absolutely is an underpinning factor. At the same time, our working assumption that has not been challenged so far, that the vaccination progress represents a delay, not a derailment of the restart story. That very much underpins our conviction in European equities as well. So earlier this year, we upgraded it from underweight to neutral when sentiment was very, very negative. So that was a relative, more constructive view than the street. And that is why at this juncture, we're further upgrading European equities into overweight.
All right, so when we're back here in the U.S., Wei Li, a big part of this market and the gains that we've seen, it was because of low interest rates. It was because low labor costs, relatively low supply chain inputs, and even low tax rates. All things right now that we've been talking about that could potentially go up, although yields seem to be working in the opposite direction right now. But there's a general sense here that all of those factors that contributed to the run-up that we saw in the last leg of the bull market, that might not necessarily be there for the next leg.
Well, we do pay a lot of attention to the evolution of corporate margins. So, Romain, you talked about low tax rate, low interest rate, and low labor cost and production cost, for that matter, as a result of globalization. We could be at the point where these factors are getting to a point where it could change. So we pay very close attention to corporate margin, but in the US it's still very, very high. And specifically, if you look at sectors like technology, we do see them having the potential to pass on some of the cost, and as a result of that, not only maintain their corporate margin, but actually potentially even grow them. So we pay close attention, but that lends itself to be more selective when it comes to U.S. equity market. So here, another filter that we would apply is along the sectors using earnings momentum. So here again, where sectors that have seen strong earnings growth, technology, but also cyclical sectors like financials and industrials and consumer discretionary, and we expect similar kind of growth coming up in the upcoming earnings seasons as well. So be selective, but certain sectors we definitely still like, and more the growthy type of sectors, quality type of sectors that didn't do as well earlier on in the year in this environment can do a bit of catch up.
Wei Li, good to see you. Thank you. BlackRock Global Chief Investment Strategist, turning neutral on US equities, preferring Europe. The Euro Stoxx 50 so far this year, up almost 15 percentage points so far. It's had a tremendous year already, Tom.
Really off a base, and then you wonder, that's the bet we're hearing from BlackRock, where they make another leg up as well. John, what I just see is oomph up in a silence from the gloom crew. I mean, the gloom crew is just evaporated here. John, we got to talk about England, Denmark. You know, we make jokes about, we make jokes about it. Romain and I we're just so deeply knowledgeable. John, I want you to talk.
You should have heard the soccer conversation
John, I want
yesterday.
you to. It was just John.
Romain, give me some insight.
It was scintillating.
John, what to me is so fascinating is how guys like you always go away from Kane and Sterling and the other stars and say in the middle of the field, for example, Trippier, is it?
Trippier.
A lot of people say he's really key.
He's fantastic. Brilliant player. I'd much rather talk about Italy's win yesterday afternoon, Tom.
But right now we're moving forward in the move to Denmark and England.
But you know the secret in the Ferro household, don't you? That we're very pro-Italy when it comes to football.
Oh,
yeah.
Did you know that, Romain?
Yeah,
I think I heard.
I was asked yesterday afternoon by Paul Sweeney. He sent me an email. So explain to me, how do you make the decision? Is it Italy or is it England? When your father is Italian growing up, that's not even a question. That is just an expectation. Well, you put on the blue jersey, Tom.
You got to root for Italy for your father.
Coming up later, Rick Mishkin, the Columbia University professor of banking and financial institutions. Equity futures up 11 on the S&P, 43.45 on TV and radio. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The president of Haiti reportedly has been assassinated in what was described as a raid on his home by a group of attackers. According to the Associated Press, Jovenel Moïse was shot and killed and his wife was wounded. The AP quoted Haiti's interim prime minister, who said some of the attackers were speaking Spanish. There's been growing public anger in Haiti over Moïse's attempt to hold on to power and rewrite the constitution. There are multiple reports that Japan is preparing to declare a new state of emergency in Tokyo. That would mean the Summer Olympics would be held without spectators. Earlier today, Tokyo reported the most number of new coronavirus cases since May the 13th. President Biden will take on the rapidly growing threat of ransomware against companies and local institutions. Over the weekend, there was a ransomware attack blamed on Russian hackers that affected more than 1,000 businesses, with victims in at least 17 countries. The president will meet with agency leaders today to discuss administration strategy. The White House calls it a national security priority. And the European Union has raised the outlook for the region's economy. The forecast for this year was boosted from 4.3% to 4.8%. That was accompanied by a warning of a higher risk of inflation taking hold because of increased demand. Shares of fintech company Wise rose as they began trading in a direct listing on the London Stock Exchange. It's the largest such deal ever. The money transfer company opened at a price that gave it a market cap of almost $11 billion. Wise is following U.S. tech companies by offering existing shareholders extra voting rights. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
People always introduce me as a former police captain, but the uniqueness of this moment, I call it Esther 4 and 14. God made me for such a time like this. I was arrested. I was assaulted by police officers. Yeah. I didn't say, woe is me. I said, why not me? I became a police officer. I understand crime, and I also understand police abuse. And I know how we can turn around not only New York, but America. We're in a terrible place, and we could turn this country and city around.
I want to dig into the...
Eric Adams there, named winner of the New York City Democratic mayoral primary, speaking on CBS just moments ago. More on that in just a moment. From New York City, good morning. Alongside Tom Keene, I'm Jonathan Ferro. Together with Romain Bostic, with Lisa Abramowicz out until Monday. Let's get you some price action. Really? 43.42 on the S&P. We've gone easy on her this morning, Tom. We'll get to that in a moment. Up 0.2% on the S&P, up 90 points now on the Nasdaq 100, advancing 0.6%, and yields coming in. Let's call it 3 basis points lower. Having a little look at the 120s, maybe. Tom, 132 now.
Yeah.
On 10s, 131.96.
Yeah. There's been a continued move here. This is a grind, and it's a constructive grind. Is it a melt up? Maybe that says too much. But, John, there it is, moments ago, seconds ago, a tenth of a second ago. How about that, John? 109 beeps on the 210 spread.
Wow. And we've come down from what, the 160s?
Yeah. I mean, it's just stunning.
It's a sizable correction. 132 on 10s. We break through that. And what is outperforming in the equity market? You guessed it. Right. It's the Nasdaq, up by 0.6%. The S&P up by 0.18.
Abramowicz on a 3-week sabbatical. Shelley Banjo hasn't taken 5 days off since time began. She joins us now, running our shop here at 731 Lexington, 59th at Lexington, and in charge of all of this historic mayor's race coverage for Bloomberg. Shelley Banjo, let me get right to it. There's got to be a recount. If there's a 1% difference in Mississippi or Montana, there's a recount, right?
Yes, so we still don't have real concessions from the other two top candidates, Maya Wiley and Catherine Garcia. Garcia did not say anything last night after Eric Adams was called the winner, or called the projected winner by the AP. And Wiley came out with a half statement saying, I thank my supporters, but let's see what's going to happen next.
Shelley, is it too early to ask the question, what is the message that New York City has just sent to progressives in this party?
No, I don't think it's too early, because you saw the top two people on top, Eric Adams and Catherine Garcia, both with an extremely moderate viewpoint. We want to get crime, we want to get public safety, and we want to get quality of life issues back in New York. A mayor who can govern and get stuff done, rather than this kind of ideological vision that we've seen really dominate City Hall for the last 8 years. So yes, Maya Wiley, who was the progressive candidate, did have quite a big showing, but clearly it wasn't enough, because not only did she not get the first choice votes, but really Catherine Garcia was the one who got a lot of, or the majority of the second, third, and fourth and fifth choice votes as well.
Well, let's talk policy and what needs to get done. Governor Cuomo, with just a shocking statistic from over the weekend. Over the 4th of July weekend, more people in New York State were shot than died of COVID. Now, there's two stories there, of course, the success on tackling COVID eventually after this vaccine, but also the shootings in this state, in this city as well, Shelley. Just how much needs to be done?
Yeah, I mean, overall crime in general in New York is still down from, historic highs in decades ago. So this is not the 1970s as much as people want you to believe it. But shootings are up and continue to be up. Governor Cuomo yesterday called it declared a disaster emergency to unlock some funds to hit crime fighting. Eric Adams has now been elected on the singular issue of crime. So now at the day one in office, if he does not do something about it, it is going to look quite poorly on those campaign promises.
Yeah. I mean, Shelley, obviously Cuomo has his own agenda. I am curious about the breakdown of how this election shook out here, because we talk about the embrace of Eric Adams, and the people, at least the districts we know that voted for him, was much, much different than the folks who voted for Catherine Garcia. And they did seem to be voting for two separate things.
Yeah, I mean, you look at all of Manhattan, except for Harlem, it was all Catherine Garcia land. If you look at the, inner boroughs of Brooklyn, your richer neighborhoods, that was also Catherine Garcia. Where you saw Adams' take is, build real coalitions around the city in Staten Island, in Brooklyn, in Harlem. So, there's definitely a divide from income perspective, but you talk to a lot of those folks who ranked Adams second because they were kind of on that same vision. Clean up the city so we can get it back to working again.
Yeah, and I think perspective is the key word here. I think there are a lot of people in this city who look at it in different ways here, and, hopefully Adams will do a little bit to address the crime and make it safe for Tom to go back below 59th Street once again. I am curious on the progressive question here, Shelley. The idea that the city wanted someone who was a little bit more of a taskmaster, someone who was a little bit more moderate. When you get down below the mayor itself here, and you look at Brad Lander getting the comptroller's position, when you look at Alvin Bragg getting the Manhattan DA position, these are definitely sort of tie-dyed progressives here. And I'm wondering, what message does that send that voters were willing to sort of go for the progressives at that level, but not necessarily at the mayoral level?
Right. And Adams' mayoralty is going to be nothing if not interesting, because not only, has he made these grand promises, but he is, as you mentioned, going up against and having to deal with and build coalitions with what's probably going to be the most progressive city council in history, probably for the first time majority female and most diverse, as well as a progressive public advocate, a progressive comptroller, progressive DA. So, it's going to be tussles between between those two groups, and they're going to have to figure out a way forward together.
What is the relationship of this former captain of the New York Police Department and his brethren, the NYPD? Do we know?
So that, I think, is going to be the most interesting thing. He has this aura of being this cop, right? But for his 22 years there, he was, stirred a lot of controversy there and fought against it. So one promise he has made is, I'm going to bring aboard the first female police chief, which was going to be interesting to see if he's going to bring someone from inside the force or from outside the force, and from maybe even outside New York City, as we've seen. And so, how he deals with the police and carries out those promises, he's talked a big game.
Can you not be a stranger? Like, do we just have to see you during an election?
Anytime.
John, can we see more of Ms. Banjo?
Well, Shelley also has to have a disciplinary role within the Bureau
she usually slides in at 11
I'd like
a.m.
Shelley to come back and sort you out on a daily basis. That'd be nice for me. Shelley Banjo, the Bloomberg Bureau Chief here in New York City.
If they're out of peanut butter pretzels upstairs, who do you think I scream at?
I don't think it's Shelley's problem. I'm talking about different disciplinary matters.
Oh, excuse me. Yes.
Your bond market, 131.46. Yields are in 3 basis points. We have a bid in the bond market, an outperformance for big tech. Guess what underperforms?
Yeah, the Ting is fresh.
Banks. We're down about 0.75% on Bank of America today. More pain in store potentially remain for the financials with that bid back again in the bond market.
Yeah, and that drop in yield is going to have a huge ramification. Not only that, but really for a lot of those trades that were tied to those yields.
43.42 on the S&P 500, advancing 0.2%. Outperformance on NASDAQ 100 futures, up 90-odd points, advancing 0.6%. That debate, Tom, that we started the year with, what part of the equity market do you want to own? And the debate within the debate, which is if you want to own the cyclicals, for how long? Is it just a durable trade over a long period of time or a reopening trade?
Imagine that debate about July 25th as the earnings have come in.
Yep, 1 week away from bank earnings, kicking off with JP Morgan July 13th. Full coverage on TV and radio. Heard on Bloomberg Radio, seen on Bloomberg TV. Alongside Tom Keene, I'm Jonathan Ferro. Together this morning, I'm pleased to say, with Romain Bostic, your equity market advancing from New York. This is Bloomberg. Live from New York City. For our audience worldwide on TV and radio, this is Bloomberg Surveillance. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramowicz is not in Crete. I can confirm. She's not in Crete, right, Tom?
Yeah, she's not. There's some real confusion because I found out the
hear.
Gulfstream didn't get there. The Gulfstream she left in Scotland, and it's a real mystery to it, John. We really don't know where she is.
I can
which
confirm
is okay.
she will be back on Monday. With us until then, I believe Romain Bostic's going to be with us through this morning, and maybe if we behave well enough, Tom, he'll join us tomorrow and the day after that. We'll see.
People talk to our
Your equity market up 6, 43.40 on the S&P 500. We advance. Equities up 7. We advance 0.16%. On the Nasdaq 100, up almost 91 now, up by 0.61%. Are we really reducing trillions of dollars of equity calls down to what happens in the bond market? Is it all about this? Yields are breaking down by another 4 basis points. We're now staring down the barrel of the 120s on a 10-year at 130.79, Tom. That is a real breakdown on 10s. That curve is flatter. Your yields are lower.
I'm glad you mentioned that, John, because in the last hour, it's a real breakdown. It's not just over the last number of days, but, folks, we've really seen an amendment here in the bond market in the last 60 minutes. Maybe in the equity markets we sustain now, but the bond market moving.
This tees us up for Tuesday morning. Next Tuesday, July 13th, JP Morgan comes out with numbers. And Romain, the reason I say if we really reduce this equity market down to a bond market call, is there anything that JP Morgan can deliver, can say about the future that will deliver a sustainable rally if this bond market doesn't participate?
I don't know about the future. I mean, maybe they benefit from some of the volatility, but when you look at some of the expectations here for that double-digit earnings growth that this market was looking for, not only really for the second quarter and the third quarter, but there was the idea here that they would maybe sustain that deeper into this year and into next year. Right now, the expectations are for negative growth, for that to turn negative by the time you get to Q4. And you mentioned those yields, and of course, the real yields themselves. That really has been the traffic signal now for a lot of investors with regards to these banks. Go back to the late May, I should say, and the very beginning of June, when you had the KBW Bank Index basically at record highs, and a lot of people were changing the narrative here that rising rate environment and that yield differential was going to be the real tailwind now for a lot of these banks. And when you look at the collapse that we've seen in yields over the past couple of weeks, that has to be reassessed. That 130 that we just had on the screen, that's an astonishing number, a number really that really has broken down really over the last 35, 40 minutes.
Romain, we're holding on here.
Yeah.
Tom, 130.12. We're down almost 5 basis points on the day.
Yeah, well, again, this is a movable target. It's going to come off soft and hard economic data. They're coalescing into a slower economy. And, John, should we be surprised when someone like Jan Hatzius at Goldman Sachs says we will go sub 3%, and others even look at potential GDP under 2%?
So you've
at
touched
some
on the
point
debate.
you get back there.
TK, that's the moment we're in, right? That's the debate right now.
Yeah.
What's driving this market? It's clearly rate of change and not levels, because the levels are still decent. The ISM came in the 60s. That's fantastic. Everyone was looking at the deceleration, though. Where were we the month before? Where are we now? As you point out about Jan Hatzius of Goldman, what are you talking about? You're talking about not the stellar growth he looks for this year, the deceleration into next year.
What's been the change, though, over the last couple of months where we went from talking about 2% yields on the 10-year to now talking about a potentially 1% and sub 1% on nominal yields?
Emphasis at the Federal Reserve. Bottom line, in the last month, the emphasis at the Federal Reserve has shifted. We've gone away from overwhelmingly focusing on the labour market to a Federal Reserve, and this is perception. It's up for the Federal Reserve to say whether this is reality. The perceived reality of the Federal Reserve is we've had an emphasis shift away from a focus on the labour market and a huge amount of slack that remains towards a risk management position. And I think a lot of people over the last month have conflated a change in the balance of risk over at the Federal Reserve with a shift in the reaction function. And most Fed officials would come on this show and tell you there has been no shift in the reaction function of this Federal Reserve whatsoever.
It is a new theory, to say the least. We've done a lot on the markets this morning. Thank you, Abby Joseph Cohen, Wei Li, and others for market perspective. Joining us now, the former governor of the Federal Reserve System, Frederick Mishkin, is at Columbia University. And one thing I know for certain is everything he's ever written has paid great respect to markets as an observer of what our economics does. Rick Mishkin, you, Peter Hooper, and Amir Sufi a number of years ago, 2-3 years ago, talked about a monetary policy, a Federal Reserve, a Phillips curve that was hibernating. Is our traditional monetary policy hibernating and someday we'll get back to it? Or are we moving on to some form of new paradigm?
So I think you're right. We're hibernating. that the Fed, I think, very well may be behind the curve, that they had basically two elements here, which is one is that they've gone to this average inflation target, which I actually think is a good thing, but haven't defined it well enough to actually anchor expectations the way they should. So I think that's a problem. But the other is that they basically have said that the Phillips curve is not something they're particularly worried about. But on the other hand, I think they will find out that it is hibernating and that there is an issue. And I think that the Fed will actually end up doing what it has to do, but it may be a little bit late. So I don't think that it's so much that I think that they're going to be mugged by reality. I think that's what's going to happen here. Unfortunately, I think that they may be a little bit too complacent about the fact that the economy is running very hot, that inflation, I think, is going to be less temporary than they think it is. It's true that there is a supply shock, which is temporary. But the real reality here is just demand is really jumped a lot because of very expansionary fiscal policy and pent-up demand because most Americans are financially much better off than they were before the pandemic, and they have been able to spend.
Rick, every data point we look at in the American economy over the last 6 months, year to date, call it the last 7 months since the end of last year, has improved. With the exception of the participation rate in the labour market, how complicated do you think that is? Does that complicate things for the Fed, that this participation rate has just flattened out?
Well, I think it's a surprise from what typically happened before the pandemic. But, we have a situation where a lot of people are basically wondering whether they want to go back to work the same way after the shift in terms of work at home. And so it does complicate things in terms of deciding how tight the labor market is. I think the labor market is a little bit tighter than it used to be that 3.5% unemployment looked like some of the natural rate of unemployment. It may be somewhat higher in this case. So it is complicating things, but not in a way that they can't figure out. So I think as soon as, I think a key issue here is a central bank never should take its eye off the inflation ball. And inflation has been very high. And if it's not as temporary as the Fed thinks it's going to be, they need to move and move relatively fast at that point.
Are they already too late, though, Rick?
I think they may be a little bit behind the curve. So, the issue is that in some sense, there is a little concern about deja vu all over again in terms of the 60s, where the Fed was in a very similar situation, very accommodating monetary policy with very expansionary fiscal policy. I don't think we're going back to the 60s, but I think that they're a little bit behind the curve here. And so that it's going to be more costly for them to get inflation under control. And that's added to the fact that I think they haven't managed their new monetary policy strategy as well as they could. And as a result, inflation expectations may not be anchored as well as they should be.
I want to go back to the mathematics of Rick Mishkin. And the mathematics describes, folks, the path of putting the genie back in the bottle. Rick Mishkin, how do we put the fiscal genie back in the bottle?
I don't know if we can. The only thing that's sort of bipartisan in Congress is the unwillingness to worry about budget deficits. That I feel the Biden bill that was passed was much too large. It was, I think, a bad bill. It had paying big checks to people who are earning $150,000 who were not at all hurt by the pandemic was a bad idea. I think they should have had more contingency in terms of the $300 payment in terms of unemployment insurance, which I think is creating some problems for them. And then there really is no one in Congress right now who's really very serious about balancing the budget. The Republicans are perfectly happy to say, let's not spend, when in fact the Democrats are doing it. But on the other hand, they certainly were not serious about getting fiscal policy under control during the Trump era. So I think we do have a problem here.
Rick, just a final question from me. I'm just looking at the Bloomberg right now. We've just had a break of 130 on 10s. To 4 decimal points, your low of the session is 129.96. For you yourself, from your perspective, what on earth does this bond market tell you at all anymore and at this point, with a yield on a 10-year of 130?
Yeah, I think I tend to differ. I think that there's more potential for problems in terms of inflation than the bond market thinks. By the way, I should tell you, I hope that the bond market's right and the Fed is right, that inflation will not be a problem. I think that'll be much better for the economy. But I think that the balance of risks here now is one where there's much more danger. So I think complacency, one of the things I worry about a little bit is complacency in general in the markets, not just in terms of the bond market, but also the stock market. And that could be a problem in the not too distant future.
Hey, Rick, it's going to catch up. Come back soon. Rich Miskin there of Columbia University. Thank you, sir. Your yield on a 10-year, 130.46. What a lineup we've got on Bloomberg TV in about 20 minutes' time. Bob Michael of JP Morgan Asset Management together with Priya Misra of TD Securities on your bond market with a big bid again. Yields lower, Tom, by 4 basis points.
Well, let me ask a question here. We do this within the backing of the best headline system in the world. Thank you to all over at Bloomberg Print for that. John and Romaine, do we have a why? Do we have a why for this intraday move, 4 basis?
For the intraday move this morning, Tom, the answer to that is simple. Right now, no. You can come up with your own story. I think more broadly, Romaine, over the last month, there is a fitting narrative for a 10-year yield that breaks 130.
I think so. And you're seeing the embrace. You're seeing another headline cross. We did actually break below that 1.3 level here just a few moments ago while Rick was talking here. So you're talking 12996 if you want to be precise about it, going out those 4 decimal points, Tom. Yeah, absolutely, Tom. I learned from the master here.
Kool-Aid.
So, yeah, absolutely.
It's working.
I'm all in. Bloomberg Surveillance. It's the second best show on this network.
We should clip that. Maybe not.
Yes, the Open is, and Romaine, just so you know, the Open is the best show on the network.
Romaine will slowly get that as well.
Yes,
130.96 on 10s. The bid is back. We're down 4 basis points. And as we break down, you see it captured in the equity market. It all starts here in the bond market, and then it drifts to equities.
Yes.
NASDAQ futures up 90, Tom. NASDAQ futures up 90 points. We advanced 0.6%. The S&P underperforming just a little bit. We're up, Tom, by 0.12%.
This is important. There's a partition here, and you see it in the VIX. The VIX is supposed to be a 15 on its way to 14.
No.
And instead I got a 16.42 VIX. No. This is a tech move.
From New York City, heard on radio, seen on TV, alongside Tom Keene, I'm Jonathan Ferro, together with Romaine Bostic. Who said summer trading was boring? This is Bloomberg.
With the First Word News, I'm Rich Gupta. The president of Haiti has been assassinated. The country's interim prime minister says that gunmen killed President Jovenel Moïse at his private residence and wounded his wife. Some of the attackers were said to have been speaking in Spanish. Moïse had governed by decree since January 2020, when parliamentary terms expired without elections being held. Biden administration officials have spoken to both Saudi Arabia and the United Arab Emirates about their standoff over oil production. The White House says it's encouraged by ongoing OPEC talks. Oil prices rose after OPEC members couldn't reach a deal on pumping more crude. And Hurricane Elsa has weakened to a tropical storm in the Gulf of Mexico. It's expected to make landfall today north of Tampa. The storm's top winds reach 70 miles an hour. The concern is that Elsa could push a dangerous storm surge into Tampa Bay, raising ocean levels up to 5 feet. In New York City, former police officer Eric Adams has won the Democratic mayoral primary. That makes the Brooklyn borough president the overwhelming favorite to be elected mayor in November. Adams held off former sanitation commissioner Kathryn Garcia by 1 percentage point in the ranked choice voting. And the world's richest person just got, richer. Jeff Bezos' fortune reached a record $211 billion after Amazon shares rose 4.7%. Amazon was boosted by the Pentagon's announcement that it would share a giant cloud computing contract with rival Microsoft that added more than $8 billion to Bezos' total. All this according to the Bloomberg Billionaires Index. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rich Gupta. This is Bloomberg.
We've gotten a positive reaction so far. So we're hoping that it'll be another 8 months. Could be longer than that, but things are going well. AT&T team's working hard. Our team is working hard. So very exciting bringing these two companies together. We have a strategy that we've developed, and now we'll see how HBO Max does and HBO over the next year, how we do with Discovery Plus, and we'll see if we can come up with something, some best practice.
And after they get there, they take a swim test, and then there's a 20-mile hike. Mr. Zavlev of Discovery, their chief executive officer, kicking off the punditry and comments of Sun Valley. except this year's Sun Valley, Camp Sun Valley, is very, very different. Our Edward Ludlow reports. Romaine, I have no idea how he pulled the straw on this puppy. Ed Ludlow with Bald Mountain behind him. And as you well know, Ed, because you ski it twice or maybe 3 times every winter, there are the difficult Black Diamond runs of Bald Mountain. And we got a bunch of billionaires in streaming. They're just trying to get down Fire Trail right now. How are they going to do that? How are they going to ski down the wars of streaming?
Yeah, well, I chatted to one executive this morning that made the point. This is the first time this group of brain trust CEOs, billionaires, has been in person for 18 months. They have pent-up energy, pent-up anxieties. Yeah. The executive made the point that a lot of those people in that room are his customers, or they're his bankers, or they're his investors. And the way to get a true measure of somebody is at 6,000 feet elevation here in Sun Valley.
Within the elevation of Sun Valley is the idea the pandemic's over. Netflix is doing this. Discovery, as we just heard, is doing that. What are you going to listen for here, or just as well, that will get done in 6 weeks?
Yeah, look, the message behind the scenes and on the record is that this is all business. The pandemic is essentially over despite the restrictions in place here. Mary Barra, GM CEO, told me she was all about business this week. That's why she's come here. There is on the agenda talks about the global economy. There are health experts here to advise about the ongoing pandemic. But really, this is about deals. I asked one executive, which deals will we see? Will we see deals? He wouldn't name any, but he did make the point that for 35 years we've seen deals. Why would this year be any different? What you really get is a sense of postponement, that people have waited 18 months to get together. In TMT, we've seen such activity in the first 6 months of this year. More money change hands in that sector since about 2000 for the last 20 years. So there's stuff to be done. We know that scale matters in that industry, and we're watching names like Viacom, CBS, Comcast very closely as they chase the rest of the pack.
Well, I think that's interesting. I mean, you bring up the idea that so much money has already sort of been committed to in the first 6 months of this year, and it raises the questions, Ed, as to sort of what types of deals are left, or at least which ones would actually make sense here. It seems like whatever consolidation could be done, that's already been pursued here. And I'm wondering, is there any sort of chatter here, at least among the bigger players, that there would be a need or even a desire or appetite for further consolidation at this point?
Yeah, the reason that everyone's focused on Discovery and Warner is because Allen & Co., the host of this event, are advising on the deal. You're right, there isn't much left out there. Viacom, CBS, Comcast, NBC Universal, by extension, are under pressure. One of the most telling comments that Zaslav made was that he is paying close attention to the Amazon MGM deal because it shows that scale does matter. The only way these guys can compete is if they scale up, but there isn't much property out there to buy. And as he suggests, Amazon and Apple have the cash. They have sharp elbows, and they've really switched up this industry.
Yeah, we'll see if Apple ever becomes a thing in the streaming wars like it promised to be. I'm curious, is there talk at all about regulation and the idea that some of the dreams of consolidation could sort of run into, I guess, a new administration and a new focus here on size and scale?
I've asked, and people say, we'll see. I mean, the Biden administration has put energy back into antitrust. It is something that the bigger names are conscious of. Facebook, a little bit off the hook with the latest FTC decision in the courts. I asked Sheryl Sandberg of Facebook if we will see Facebook being more aggressive now because of that decision. She smiled, said, nice to see you, and didn't comment. I think really what people are focused on are deals that add value. You know, the pandemic theme, we talk about this a lot, has been that content is king. It's not just traditional broadcasters. It is not just traditional media companies that are trying to get hold of these properties, and they're happy to pay over the odds to do it.
Ed, among the great and gifted, is there any humility about how big telecom butchered getting into content? Is there any shred of humility out there?
You look back at the history of this conference, the deals that were born out of it. Of course, I'm thinking about AOL, Time Warner, the successes and lack of successes, Disney, ABC, 1995. What I can tell you is that the backslapping, the high fives are in full flow here. TMT, the telecoms and media execs feel like they're back. The question is, will anything significant happen here that actually changes how the industry looks? I haven't seen Mr. Bezos yet, but I know that he's one person that everyone is very keen to speak to.
When you get on a bicycle in the trail behind you, on radio, folks, he's got this gorgeous view and this bike trail behind him. Are you going 1 mile or are you going 5 miles on the bike?
As you know, I'm a keen cyclist. I like to put time in. I'm busy working, but I did see Uber CEO Dara Khosrowshahi on his bike yesterday morning. And I also saw a CEO who I won't name doing a run at 5 a.m. this morning. Come to Sun Valley and run at 5 a.m.
Ed, excuse me, Mr. Ludlow, in our world, 5 a.m. is midday.
Wow.
Thank you. Ed Ludlow on the watch, and he'll have further reporting for us here from Sun Valley. And clearly, folks, as Zeitgeist, I'm not a big fan of it. I think it's, it's what it is, Romaine. But guess what? This year is different. It could be really interesting at Sun Valley 2021.
Absolutely. I mean, and you talk about the competition that we've seen pick up for streaming because of the pandemic, even prior to the pandemic. It'll be interesting to see whether they can sort of facilitate some sort of consolidation here, because there's too many streaming channels out there, Tom.
Don't you think so? And the
I
other
can't
thing
keep
is,
up.
Romaine, is your house like my house?
Yeah.
We're just dying for new product.
Yeah, I think I spend more on streaming now than I spend on like medical bills.
Yeah, it's true. And we're going to have to see how that is. Romaine, let's get ready for the close here.
Yeah.
I've got a NASDAQ market that won't come down.
Yeah, and this is going to be interesting. Keep in mind, we are going to get those Fed minutes at 2 p.m. on Washington time.
Do we care? Come on.
Yeah, I think we do, because, look, we know that there was a big pivot here after that last Fed meeting where people really started to assess not only the hawkishness, but really the idea that this Fed wasn't quite as unified in the messaging as it had been in the past. The idea here that the focus on unemployment had now maybe shifted back a little bit more to inflation. And I think that if you get a little bit more of a read as to what went on behind closed doors, that could determine, I guess, where we go next year. Well, look, you're looking at a yield now, 1.31 right now on the 10-year. We were below 1.3. You got a 30-year below 2 here. That's telling you something. You got a 10-year real yield, now -1 here. That tells you a lot now about how sentiment has shifted, Tom.
It's at our start low, and as I mentioned, end of July and into August, maybe this word stagflation is going to show up in the zeitgeist a little bit more. What's that mean? That means growth.
Yeah.
NASDAQ, the rest of them, they do better.
Yeah, and absolutely. And I thought it was interesting, too, because earlier this year, we were talking a lot about stagflation. People were really dismissive of it. They were basically saying it's not going to happen. That's not in the cards. And now you're starting to look at sort of this economic data come out, the stickiness of some of these transitory inflation measures that we were told were transitory. And you have to wonder. You have to start wondering.
I got a feed here, Romaine, of Ed Ludlow after his interview with us, and he just actually got on a bike.
Did he? Oh, my gosh.
Drove. I can't.
Working hard. Thank you, Ed.
It's a tough job. Ed Ludlow in Sun Valley. He'll hopefully drop by and have more for us as well. The former vice chairman of the Fed with David Weston at 12 noon. Good morning.